Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. It's Fed Day.
It's Fed Day. Yes, it is. And we'll talk about that in a little bit.
Yep. Joining me in studio, of course, you just heard from her, is our senior economist, Tracy Shuchart, who's got a jam-packed day. We got Mike Green this morning. We've got Tony Nash later. Lot to talk about.
Lots to talk about today.
Yeah, I'll be leaning on you. And, of course, the other person I'll be leaning on, as I always do, our senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Deli. Good morning, Shy. It's going to be a great day today.
It is. Good morning, chat. Good morning, everyone that joins us here on NinjaTrader Live in the morning. This morning, I put out my note. I said, Fed Day today, tariff day tomorrow. Tick tock tick right now, right? Like this is, we're getting close, Shy. I mean, 90-day pause is coming soon to an end. And do we have any resolve?
Well,
is there anything?
Not yet, but we did see before the market reopened, before the futures market reopened, trade talks were confirmed by China and the U.S. Both sides said yes. They'll be held on May 9th in Geneva, Switzerland. And obviously, we saw the markets open up, straight up. So come back a little bit, but markets seem excited that this is confirmed.
Well, I look at this as hopium, right? I mean, the market, if you go back to where we were and where we are now, I look at the market. It's amazing how different of a lens we're looking at tariffs now. If you go back to before, even a minimal or modest tariff was going to be really bearish. The market has now eaten that up and now looks at it and goes, oh, well, if it's only this much of a tariff, we're great. And it's amazing how much that shifted. It was interesting. I don't know if you or Jimmy caught Paul Tudor Jones yesterday on CNBC. Did you, Sean?
Yeah, I posted that on chat yesterday.
And what was your take coming from that?
It was interesting. I think it was interesting. He likes the idea of tariffs, but, not to the extent that they have been pushed. He sees 40 to 50% on China is what he thinks will happen. And he also thought, he also said that he doesn't think the bottom is in this market until something is resolved, which is interesting.
Yeah, I mean, look, I don't think that's that crazy of a statement, actually, because he's basically saying until we know what it is, market could free fall again. I mean, that's just reality, I think. I mean, the market's not telling us that right now, but at any point in time, look at how fast it broke earlier. Does not mean that it can't happen again, right? And if past performance is ever indicative of future possible results, if we all of a sudden get tariffs that are similar to what we thought they were, will we see this again? We don't know. I mean, today, obviously, Fed Day, we're going to get focused on that. We go to you, Jimmy. I don't know if you saw or anything or heard anything about the Paul Tudor stuff. I think it's interesting just because obviously he's the man, really, I think. Yeah, I've always kind of looked at him as the man in our industry. And also give us any insight what you're seeing in the overnight trade.
Yeah, I mean, on that front, if our iPhones cost $3,000, you're going to have folks with pitchforks and torches storming Capitol Hill, and I think that they know that. So there's going to be some resolution. I think it's just going to take time as we go forward here. That July 8th date is creeping up pretty quickly here for that 90 days. But overnight it reacted to it that the meeting that supposedly is going to happen in Switzerland, and you saw everything kind of unwind a little bit. Equities made up yesterday's losses. Gold reversed somewhat. Bonds are a little kind of in the middle of the range here, just waiting for FOMC today. So that was pretty impactful. I think that just that one kind of news blip is causing this kind of reaction. So volatility is not going away anytime soon because we're going to get more and more of this.
No, it's not. And, we have Jason Shapiro later today, who I really enjoy watching. He'll be following Kane. And I look at his whole trading philosophy, and he talks about when you look at markets and the way that they're positioned. I'm really looking forward to what he has to show us today, because he'll be on every Wednesday at 11 following Kane. But when you start to see markets get overpositioned in any one direction and the news fails to follow through in that direction, the contrarian trade, that's where I think we're getting close to. That's why I'm very interested to see what Jason thinks, because what I'm starting to see is if we continue to get bullish news, the market feels overbought. We've talked with Helene Meisler. She even said that we were getting close to overbought, or we were overbought, but not to like extreme levels. If good news starts to now not be able to take the tape any higher, I think that'll be interesting. I think you could look at that across the board in other markets as well. You know, I'm sure Jason will talk about gold, and maybe we'll have him talk about bonds. I know Jimmy will be on there with him, and we'll see where that is, because to me, I think that's the most interesting thing right now, Shai, is that, you know, the market continues to search for these good headlines, but as each headline comes out, unless it's really resolved or unless the headline is super, super positive, we're not really getting follow through. Like, I mean, we are. It's just getting less and less impactful as we get up here. Is there anything else coming out today or anything else? I know we're going to get into the Fed. It's going to be Fed speak all day, but anything outside of that?
Fed speak, we have crude inventories at 10:30 for data, and then FOMC, and obviously the presser afterwards.
Yeah, the presser is going to be big. I know you got Tony Nash following FOMC announcement. Remember, everybody, we're starting a little bit earlier today. What is that, 1:55, Shai? You'll be on with Jimmy.
Correct. Yep. We will be talked about the decision beforehand, and then we will see what the decision actually is, what the statement says, and take a look at how markets are reacting.
Got it. Yeah. Let's preview this morning. We got Mike Green, Chief Strategist, Simplify Asset Management. I've been following him. He's Prof. Plum.
Professor Plum.
Professor
Yep.
Plum, but PROF.
From Clue.
Yeah. He is. I love him on Twitter. I think he's great. I'm very excited to speak with him. Give us a little preview of Mike.
So Mike's a macro guy. He's worked for everybody in the business, basically huge macro asset firms, and now he is with Simplify. And so we're gonna talk to him a little about what he's seeing in the markets. I want to talk to him about a little bit about his theory on those passive flows and what that means to the market. And right now that we're seeing all this volatility, because he talks about that a lot. And of course, we'll see what he thinks about the Fed.
Yeah. And like I said, jam-packed day today. We start off with Mike in about 15 minutes. And then we have, of course, Pharm. Then we've got Tanya. Then we've got Kane. Then we've got Jason Shapiro. And then we've got, today, I don't know. Jimmy, who's your guest today?
I got to tell you guys, I've had this guy on in the past, Brannigan Barrett from Trade Low. He is he's been a futures trader since 2011. He's an unbelievable macro guy, micro guy, you name it. He's going to have great insights. So I'm looking forward to talking to him again.
Yeah, Trader Brand's great.
Yep.
I met him in person in London a few years ago. He's a really good dude, really good trader. And then in the afternoon, we've got Tony Nash. And then later in the day, we've got a closing out, bat and cleanup, as you said. We got XY. And who's on with XY today, Jimmy?
I believe it's Stowe again.
Stowe. Boy, they got
that team.
I do. I love them two together. And then their bat and cleanup today going to be interesting because they're pretty active guys on a Fed day. So make sure you stay tuned for all of that. So before we get into all of that, Shai, again, I want to talk about oil and energy just a little bit, just because what we've seen so far in oil is it continue to protect that 55 level, as you've talked about. It's one of those markets where obviously the fundamentals are going to always be really the lead driver in it. It's a less technical market, although in the short term it can become really technical and really good. I've seen a lot of traders traded on the short term technicals very successfully, but does have the macro backdrop. What's behind the scenes happening right now in crude oil? So
in crude oil, sentiment is still poor. That said, there are we're a lot of shorts in the market. So I think we're seeing a little bit of some short covering on this move from 55 to, 60 overnight. We're at about 59.61 right now. Markets are still unsure of the global supply-demand situation because we have OPEC Plus adding another 411,000 barrels per day in June. That said, we talked about, Saudi Arabia is going to be the bearer of most of that, and their domestic demand does go up during summer because they do use crude oil for air conditioner burn, straight crude oil. So we definitely see their demand rise, their domestic demand rise in the summer, and they usually ramp up production every summer anyway for their own domestic consumption. And so, I do think the market's overreacted a little bit on that. And really, this market is really been guided by sentiment right now because the fundamentals are still relatively strong. Even though everybody's expecting this global slowdown, we're not really seeing that in global stocks. Now, we do have EIA crude inventories today. Yesterday, we saw a draw on crappie of a little over 4 million barrels. We'll see what EIA says today. But, if it looks anything like last week, it's pretty bullish for the market. Again, it's sentiment, I think, that's adding all this pressure on this market.
Yep. And, I traded crude this week for a few brief short minutes, actually. I've been trying to buy the dip. I don't want some overnight risk in it right now. I mean, again, and I don't love going against the grain like crude, even though it's bounced. It's not been, it's bounced okay. I mean,
it's still in a downtrend.
Yeah, it's not hanging on. It's not rallied as much as even I would have thought off of that area. But Jimmy, let's go to you. FOMC today. My focus when I'm watching FOMC, my mind and my eyes are always initially on what does the bond market do. I'll look at 10-year, we'll look at ZN, I'll look at ZB. Those markets continue to struggle to hold rallies. I mean, ZB, I think technically looks pretty weak. From where I sit, it's kind of in the middle of some moving averages. It doesn't really look like it's super bearish, but it doesn't really look bullish to me. 10 years, a little bit more bid. I think today you're going to see this little bit of cluster that we've had over the last few sessions, probably see a breakout one way or the other. Technically speaking, and even put on your bond hat going into FOMC days, what you're looking for potentially to come out of today in the bond market.
Yeah, so I mean, I think you're right. All eyes on the 30-year bond, the long end, the risk part of the curve. This is we're slightly below all the major moving averages right now, and it's kind of like crude. Like we have a little bounce, but this is still heavy. This is still a heavy market. We have that stochastic cross under that's still in play. So the 30-year, like you said, it's going to break out one way or the other. There's going to be a bigger candle today, most likely, once the presser starts. I'd be surprised if there wasn't. But right now, this is looking a little heavy, and we're not expecting a rate cut, and probably Chair Powell is going to navigate the presser masterfully. So maybe we won't have the same fireworks we usually have, but this is going to be my number one market I look at going into that and then kind of adjusting. Right now, the interesting thing too is the relationship between the bonds and the E-mini S&P now in a matter of 8 days went from positive correlation to now way negative correlation. So if that kind of stat holds true, then if bonds break, maybe we could see a rally in equities or vice versa.
What's crazy is that correlation is breaking right into a Fed meeting. You have bonds that have fallen off of their recent highs. Equities remain bid, full of hopium. As we've always said, the bull markets, they don't, and this is not a bull market. At least we don't know it is yet. But the bulls never give up easily. It's amazing how strong equities have acted. And this is my whole career. I mean, they're not meant to go down, so I get it. But boy, when they get bid and then you see bonds turn the way that they did, you would have thought we would have had a steeper pullback. We have not. But, it is what it is. Quickly, Shai, before we get into this morning's Edge Report with Jimmy, we're all looking at the 30-year as the key market to watch. We know that the Fed it's really the only part of the curve, not the only part, but they can't really help the long end.
Right.
Right. And so I'm curious, on the short end, what is the dot plots? What is expectation today coming for FOMC?
Well, so FOMC is supposed to hold today. We will not get a dot plot this time. It's not coming out. What everybody's going to be looking at as the Fed remarked, specifically as it pertains to that GDP number that just came in for Q1 that was, I think, minus 3%, 0.3%. And to talk about the labor market, everybody's going to be listening to his wording. And to see, if it's kind of a dovish statement or if it's a hawkish statement on a hold, if that makes sense. Because people are going to want to see what they're looking at in the market. What are they worried about? We did have jobs numbers still resilient, though, the job gains are down slightly. So we want to see what he feels about the labor market and then what he feels about inflation and if he's expecting tariffs to still cause some inflation. So it's really all going to be about what the Fed says. Another thing, Schmidt will not be voting today, so only 6 members will be voting because, unfortunately, his wife is in the hospital. So it'll be a little different Fed this time because we'll have 6 members instead of 7 voting.
Yeah, you don't have an odd number. It's interesting. But, all right, we're going to be talking more about that with Mike Green when we get back from this morning's Edge Report with our senior market strategist, Jimmy Cagnina. Take it away, Jimmy.
Well, let's start with the 30-year U.S. Treasury bond since we already started talking about it. Again, this market's behaving like a risk-on, risk-off asset, it seems like, as opposed to anything else. Right now, intraday chart on the screen, 30 minutes. We have a high vol level. This is the Menthor Q high vol level, kind of framing the top of the conversation at 115 even. On the upside, we do have that R1 pivot level around 115.08. And then we have a 0 DTE high vol level up at 115, 16, 30 seconds, then R2 at 20, and then 1-day max at 23. On the downside, we have that pivot we're just sitting there, and we blew through that right off out of the gates, and that's approximately 114.20. And that JAX 1 level, 114, 16, 30 seconds. Things get really ugly. Then we have S1 all the way down here, approximately 08, 114.08. And then previous sessions lows is also on my radar screen, 113 in 31, 30 seconds. Moving over to the 10-year note too, because they're kind of behaving a little bit differently. And I'm just going to go to a daily really quickly here. We're back in this consolidation range, and maybe not a surprise since there hasn't been a rate cut for a long period of time. But ever since February 26th, we've kind of been in this consolidation range. Yeah, we broke out a couple times. We broke down once, but we're right back in it right now. And all the moving averages are pretty tight. That 8 and that 21 are just about to touch. We do have a cross under on the stochastics a couple days ago, but this is still very much range bound here. And we're at a 4.33 or so 10-year yield, 4.32, sorry, 10-year yield. For targets, we have a couple targets up here. We do have previous sessions highs, which kind of frames the conversation at the top, 111, 12 half. And then a little bit further up here, we have that high vol level at 111, 16. And then R1, of course, is 17 half. On the downside, we have S1, which is a nice target for bears. It's at 111.005. And then below that, previous session's lows, pretty far down actually, 110, 27 half, 1-day min right below that from Menthor Q. So that's kind of what that market's looking like. Let's pivot over to gold. Gold kind of did a little bit of a reverse here. Let's see if it's still doing it. Overnight, right? We had that rally here. We had a nearly an all-time high close yesterday. Kind of sold off a little bit, but we do have a little bit of a buyer's wick at the bottom of today's red candle. Again, everything's kind of rotating maybe on the China news. I don't know. But there, targets on the upside are, I have my target wick right at that 100% fib. That's at 55.10. Should this market get some traction to the upside, we do have a moving stochastic cross over, which is also a little bit bullish here. And the moving averages look like they're behaving and sloping upward nicely. Just on an intraday, really quickly, tight range today. The pivot's kind of really formed the area of resistance on the top here. That's around 3,400. Rounded up to 3,406 exactly, and it met actually the London opening range perfectly. So that's that's kind of a resistance right now. We have Jacks 2, Jacks 3 up above. Previous session's highs is another great target, 34.44. And then that one-day max by Menthor Q right below that R1, 34.72. On the downside, S1 is kind of framing the conversation for support right now. That's approximately at 33.67. Previous session's lowest. Next target down, 33.31. And then S2 way down here at 32.93. That is this morning's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. And we are joined by, I can't wait for this, Mike Green. We have Chief Strategist of Simplify Asset Management. Mike, been following you for years on X. It's a pleasure to have you here today. Thank you so much for joining us.
Well, thank you for having me.
So I want to start off with talking about something we discussed a little bit this morning. Fed Day is today. We all know everyone's focused on the Fed, but I think after today, we're going to get through a lot of earnings. We're going to get through the Fed Day, and I think it goes back to tariff talk. 90-day pause is a lot closer than we think, and we really have had no real wins, we'll call it, or any clarification or clarity, I should say, about where we really are. And I think the markets have been kind of acting on hopium that everything is going to go well at this point. What are your thoughts on where we are with tariffs?
Well, I think that's correct, unfortunately, that we were given a 90-day pause. We've exhausted roughly 30 of those 90 days. So we're down to the proverbial 60 days till we find out what's happening. Part of the reality is that shipments and logistics require time. And so to the extent that this has generated a pause in ordering activity, when we restart, it's going to take some time for that to get through. So if we get another 30 days without significant progress, you're unfortunately going to be looking at a situation where the tariffs are actually really going to meaningfully hit in terms of their implementation. I think it's unfortunately just that simple. We're already hearing stories of ports being empty now that we're past the 30 days when something has been shipped from China. That really is the story. We can talk about all the other countries. We can talk about Canada. We can talk about Mexico. We can talk about the UK. But the reality is that this is a US-China confrontation.
And I kind of want to shift this a little bit from tariffs because I'm a little tariffed out. But I want to talk about this market, this market volatility. We've had a lot of market volatility. You talk a lot about, passive flows in the market, keeping kind of a bid in this market. What happens to these passive flows, and maybe explain what they are to our viewers that may not understand what passive flows are. How do they react during kind of this sort of volatility? And do we ever see a time when we see those bids pulled at all?
Well, we have seen components of that pulled, and I think this is actually really critical. If you think back to what happened on April 8th, when the equities underperformed dramatically and the bonds outperformed dramatically, that creates conditions in systematically allocated strategies like target date funds, in which you become overweight equities, you become overweight bonds, underweight equities. And Vanguard and a few others have instituted a new process they used to rebalance towards the end of the month so that they could show a monthly balance that was on target. Now they've introduced threshold characteristics. We triggered those thresholds on April 8th, which meant that those strategies began mechanically selling bonds and buying equities. When that hits on the back of something like the Trump tweet or the Trump statement that now is a great time to buy stocks, it creates this sort of supercharged reaction that we saw, I believe it was on April 9th or 10th, in which equities were propelled dramatically higher. Whether this is a bullish thrust because of the breadth of it, or whether this is a mechanical artifact of that type of behavior is something that only history will decide. The simple reality is when your reaction to equities being underweight in your portfolio is to go out and buy the total market index, the natural result is that all equities thrust upwards. We end up with the type of breadth that we saw. I unfortunately don't necessarily interpret that as a bullish interpretation. I would suggest, if anything, that's just more evidence that passive is really driving the bus at this point.
And do you see, I mean, this is kind of a loaded question, but do you see, do you think this market has bottomed, or do you think, we're on our way back up to new highs?
It is a loaded question, and I want to be very, very clear that the market doesn't really care what my opinion is, so I'll offer it freely. I don't think that we have bottomed, and I would highlight the components of that passive bid that are really critical. First, remember that withdrawals are always going to be a function of asset levels. So if you are taking a distribution from your 401k, once you hit retirement, you are required to take a distribution as a percentage. High interest rates have actually been very helpful to equities in that framework because it means you can withdraw cash that has been earned as income from your bond portfolio instead of selling equities. This is one of these perverse impacts that starts to happen in a passive dominated environment. But overall, if equities continue to rise, and in particular, if the Fed starts to cut rates, imagining that that is stimulus, that potentially raises the risk of liquidations beginning to exceed contributions. The second component is that passive bid is really generated by you having a job. In 2006, we changed the 401k system in the United States from what's called an opt-in system, where you had to choose to participate and you then had to select what you as an individual were going to invest in, to an opt-out framework, meaning you're automatically defaulted into what's called the qualified default investment alternative. Roughly 85% of Americans are now defaulting into these target date funds as the incremental source of their savings for their retirement. And unfortunately, that means that the stock market flows are heavily tied to employment, which is a fantastically lagging indicator. This is one of the things that I think is so important to understand about this current environment. After basically 5 years of businesses trying to find and retain qualified employees, when you're confronted with a macroeconomic environment where there's tremendous uncertainty about policy, in particular, whether the tariffs could be undone as simply as a tweet, that creates conditions under which you have to ask yourself, do I actually want to run the risk of laying off these employees and positioning myself at a disadvantage, both reputationally and in terms of resources, if a rebound were to occur? That means that the layoffs are probably not going to come until this becomes a more tangible policy. So perversely, a settlement on tariffs at a higher level than we currently are would still have negative ramifications, even if they're nowhere close to the levels that have been presented in current policy debates. And so I'm watching that very, very carefully. I think we really have to pay attention to the payroll numbers. And then that, of course, introduces whether the payroll numbers themselves are a good indicator. We've continually seen downward revisions. Those of you who follow my work know that I am a tremendous critic of what's called the birth-death model, the attempt by the BLS to estimate the formation of new businesses. I think, unfortunately, that data set has become horribly corrupted, partially by the dynamics of COVID, also by changes in regulatory frameworks that change your requirement or have reduced your ability to basically operate a business without having what's called an employee identification number. We're seeing more and more bleed over from the gig economy into quote unquote establishments or businesses that are being formed. Those aren't hiring businesses. Those are people who are basically barely holding on, driving for Uber or DoorDash, or being an influencer on Instagram.
So, well, it makes me think that the Fed is in quite the pickle here. Is when I hear that, and I think about
Well, I think that's exactly right. I think the real key that you really have to recognize for the Fed is that we are seeing inflation indicators rapidly trending down towards that 2%. If you look at something like the Cleveland Fed's nowcast of inflation, or metrics from entities like Trueflation, which provide a more market-derived and immediate read on inflation, those suggest that the Fed is actually meaningfully below target in terms of inflation. I recognize that's not the experience that most Americans feel because they're still going to the grocery store and they're still seeing high prices relative to what they remember. But the pace of those price increases have slowed dramatically. And now we're starting to see that bleed over into areas like housing and rent, which have been areas of relative strength popping up that inflation. The reality is when people are afraid of losing their jobs, they're not going to go buy a house, even if the environment is getting better. And so the Fed is confronted with a rapidly slowing economy and paradoxically an administration that is screaming at them to cut interest rates, which then raises the risk that if they actually do follow through, it will be viewed as political as compared to an independent thought process. And I got to be honest with you, I would not want to be the person who's in charge in this situation.
Yeah, and I could tell you from my standpoint, my wife's in real estate business, got a very successful business here down here in South Florida, and most listings she's ever had, and a lot of these listings, no one's even putting a bid on. You know, it doesn't matter all the price reductions, no one's even putting a bid. This market went from the hottest market probably in the country to where now it doesn't matter how much people are dropping, no one's even bidding on them. So it has really become a buyer's market, which I think is interesting. We only got you for a few minutes left, Mike, and I want to talk about today with the Fed a little bit. When you come into a Fed meeting today and we know that we got the initial announcement at 2 o'clock, and then we're going to be looking at the statement at 2:30. What markets are you going to be watching, and maybe what specific comments are you going to be watching for a lead on what you think kind of sets the tone for the markets beyond today's probably overreaction, as it always is on Fed Day?
Well, I think the really critical thing that I'll be watching is Malaysian palm oil. That was a joke. I'll be following the Fed announcement. I'll be following the rates markets. I'll be following the major indices. But in particular, what I want to watch for is the behavior of the mega caps relative to the rest of the market. You know, if you are seeing a passive bid, it tends to be led by the largest stocks. That's because there's a differential impact. That unfortunately is what we have seen coming off of the lows. It broadly suggests that the use of levered ETFs and, as I mentioned before, the target date bid associated with equities has been a key driver here. If we see more of the same, it just continues to suggest to me that what we're not really receiving is an economic signal, but instead a programmed algorithmic response to the information. As much as I'll be watching it, even faster than I can react, there will be computers that are programmed to pick up on key phrases. I would emphasize the key phrase that I'm always watching for Powell at this point is his introduction from last December of the idea of market-derived versus imputed prices. He's now repeatedly focused on that. That tells me that Powell knows he's being given the wrong information by CPI, which incorporates tons of what are called imputed prices. These would be ridiculous things like the cost of health insurance being determined by how much you actually use your health insurance as compared to the check that you write for it. While I understand the economic principles behind that, the simple reality is that it is leading our policymakers to make decisions that candidly are putting us into quite a bind. Moving beyond this Fed meeting, the other thing, and I don't expect any indication on this, but moving beyond this Fed meeting, I just have to direct people to the deteriorating finances that are occurring across the household and corporate sector at this point. That's really what we should be paying attention to. It very much feels like a credit cycle is underway. Conditions are tightening, even though equities are going up. I would point to things like the major indices, the large caps outperforming small caps. If you have a true economic cycle, if this is the second round, it should be led by the economically cyclical stuff, not the mega caps that benefit most from those inflows in a mechanical fashion.
Mike, this was great. I can't thank you enough for taking the time to speak with us today.
Thank you.
Yeah, your insight is fabulous on Twitter. Everybody go follow Mike on Twitter as ProfPlum99, Michael Green, and you'll see the picture of the guy from The Princess Bride. Mike, I got to ask you, I've been following you for years. Why is that the picture in your Twitter handle?
Well, if it isn't clear already, I am a complete egghead, and a lot of people occasionally say I'm a really smart guy, right? Well, that whole character is designed to remind me that the person who fancies themselves the world's smartest man dies in combats of wits. And so it's the question and the knowledge that you don't have that always bites you. And that's what I, keep that up there to remind myself of that.
That's brilliant. I
I
love
love
that.
that.
I love that.
Thanks, Mike.
Mike, again, thank you so much for joining us. We look forward to having you back again in the future.
Thank you very much for having me.
I finally got to ask him why that picture was up there. That was the best answer. I mean, that was absolutely fantastic.
He's fantastic.
He is.
All around.
Coming off that interview, initial thoughts?
Well, I think it's very interesting, and I think he's 100% right on looking at if we, if it's all bid in mega caps or if we're seeing bid elsewhere. I think what's also interesting is him pointing out that, if the economy is healthy, we're going to see those cyclicals rise. So that would mean that we would see the small caps start performing, and we know that they haven't. So we would see, RTY suddenly get a bid. So that's definitely something I will be watching during this presser and today, and to see, are the mega caps outperforming the rest of the stock market, or is the rest of the stock market outperforming the mega caps? Because mostly this year, really, the whole of the stock market has been outperforming those mega caps by a slight amount, but still, this is the first time in a couple of years we've even seen this happen.
Spot on, Shai. I couldn't have said it better. It's exactly what my takeaway was from this. And I think as day traders, I know that, Mike's perspective is a wider term, but that'll really help traders today navigate the tape. And I thought that was fantastic. I can't wait to speak with him again already. Everybody hit that like button. Support from you guys is what helped drive guests like that. And that was just really awesome to have Mike here today. And
fantastic.
And great analysis from you this morning, Shai, helping us through a day where there's going to be a lot going on. Thank you so much.
Thank you.
All right. Next up, we have the man, Pharm, and he's coming in with the wine-colored shirt today. Your hair doesn't look as good as it did yesterday. You got the T-shirt underneath, the collar's a little. I mean, you're coming in like you're coming off of a rough one, man, or you're just coming in for battle for today. Talk to me.
Yeah. No, the wife was out of town for a couple of days with our daughter, so it was. I was playing stay-at-home dad and trying to manage trades. I mean, I had a 1 day to expiry trade on coming into yesterday's open and had to do school with the kids. And I was like, this was really a bad idea. What the hell was I thinking? So yeah, late nights, early mornings, and running around ragged. So it's about time to get a haircut and some sleep maybe.
I could see you like Uncle Buck with the guy with the big, all right, kids, we're going to make pancakes. And you come in with the big shovel and he goes, that's the biggest pancake I ever made. That's how I could see you at home with all the kids. That's just my, thoughts.
We've got a very large pan, and my second youngest is always asking for the biggest pancake that can possibly fit in the pan. It makes for a difficult flip, that's for sure.
Boy, my intuition is good this morning. We'll see what I think about. Let's see how it works out for me later. But you were able to hear from Mike Green. I know you follow him on X too, I believe. I've seen you comment on some of his tweets before. What was your thoughts coming off of that interview today?
I mean, really, anytime I read something from him, and in this case, listening, I feel like I hear a perspective that I hadn't considered. And that's, I need to turn notifications on, honestly, because it's just every time. And the one thing that I took away from this personally that I just hadn't really thought of is, it's pretty seemingly obvious that if we have uncertainty right now, which we do, that businesses may not hire. That's pretty obvious. But hadn't really thought about the fact that businesses might be actually waiting to have some level of certainty to initiate layoffs because they could then potentially be caught off sides. Which seems like everybody's scared. You had COVID, and then they were overstaffed, and then they went the other direction, and then they were understaffed, and they had to chase back. So that was an interesting perspective. And just every time that guy writes something, and this time saying something, I think of something I hadn't thought of before. So I was glad to be able to listen to him this morning.
Yeah, no, I mean, a lot to take from. I will go back and probably watch it again before the Fed meeting when we're on our break today, and then and just kind of pull some more information from it. Let's get into the charts this morning. I'm starting off with 30-year bond because this morning Jim talked about this, and I think it's really important. What's happening right now is the 30-year bond was going with S&P and NASDAQ, and that correlation has now been broken. Not today, but over the last few sessions. I will be very curious to see if that does not find a connection back today, coming off of the Fed meeting. The Fed cannot do much to help the long end, if anything at all, some would say. What I find interesting is that if rates continue to look like they're creeping higher on the long end, how does that support an equity market? Earlier this year, not too long ago, when it was tariffs were front and center and rates were going down quickly, bonds were going down quickly and rates were going up quickly, that was just that recipe for where the 90-day pause came into play. What happens if, and coming off of what Mike said, I think the Fed's in quite the pickle here. I don't necessarily see as many cuts as everyone else may see or think. What does that do to the long end of the curve? And it just gets very interesting to me to see if the bond market today, whichever direction it goes, I would expect it to be a lead for equities, just because I think the initial reaction, they'll want to see more of what happens in the bond market. And I agree, obviously, what Mike said with the mega caps too on a relative basis, how those are the two key things to watch. And right now, the bonds, they're coming in unch from where they opened overnight, and a small little pullback overnight that's now been kind of getting erased, and we're back near the highs of the session. We're bunched up here around moving averages. I go back and I've had this area rectangled off for a while. I've talked about this for the last several sessions here on NinjaTrader Live. We can't get back into the body of that big move lower. We're below moving averages, below VWAPs. It's hard for me to see a reason for this market to go much higher than it is today, but I mean, obviously they'll be based upon what the Fed says. And if it does get up in here, I still think it's a struggle, but watch it. If it gets above 116 today, I think that could be like, whoa, rates are coming down very quickly. What does that mean? How do equities respond? I think unless it gets above 116, it's a chop fest. But if it takes out the prior day low, I look at the low yesterday is 113.31. If that gets taken out, man, I just don't see much stopping us to start heading down all the way back down to the recent lows. Maybe not today, but over the next couple sessions. I will actually start to look to get short bonds if that happens today. And to me, the stop would be just above probably one of these two highs. It's tricky on a Fed day because you have to make sure you're not selling into the first blip lower. But I like shorting bonds if today's reaction is bearish and we can't get much above here. I'd like that for a swing short, take a couple day prior high and put a stop in and see if we can make new lows. I think the risk reward is there for that. If it rallies, it becomes just too difficult. But that's just what I see in bonds this morning. And I'll actually pull up 10-year as well. 10-year to me, it's obviously more bullish because it's a short end of the curve. It's a shorter end of the curve where the Fed can have some impact on it. And when I look at it, just looks sloppy to me, man. I mean, 4.3 right now in 10s. I just feel like it's most likely range bound. If they were to come down with any significance, I think that it even more adds more emphasis to wanting to be short the 30-year, and I think more emphasis to wanting to be short equities. So if I see 10-year take out prior day low here today, which was 110.27.5, I think that is bearish for equity. So those are the two things I'll watch coming into the S&P and NASDAQ today for any sort of leadership. And then when we get into S&P, as it's loading here in just a second, and it's taking a minute, don't know why, but maybe I'll go to NASI. When I look at those markets, when we get my charts up, I don't know why it's not loading for me. Maybe there it goes. All right. So let's go to NASDAQ. NASDAQ to me, I mean, this thing has been so strong that, you look at the 8-day moving average, which is just, I use it as a simple gauge of strength of trend. And I mean, it just can't even get below it now. It ticked down to it. What is it? 5 sessions ago. Yesterday's low was just below it. Today's low is pretty much right on it. And you're like, how could that measly 8-day moving average continue to hold. It just shows the strength that we have right now in indexes. And if the bonds were to come down today and we were to get a lower low in bonds or in treasuries from yesterday and NASDAQ were to start to break, man, it's like, again, I like swing short NASDAQ or S&P. I'm probably going to go to S&P over NASDAQ because that's what I trade. And I think a stop above today's high, you know, and I'm not a huge fan of trading on Fed days, but like if we start making a low with bonds, to me, it's worth it to click in and just, you know, let my risk go. I mean, because I think if they start to come back down in here, the move is substantial. I think it's 500-600 points. I don't see a reason why they couldn't do that. If they finally break this 8-day moving average, they come back down to the VWAP anchored from this recent swing low, comes in at 19,350. I mean, that's a ways away. You know, the flip side is they rally. I just got nothing. There's nothing I can do in here. I mean, this just becomes extremely difficult to trade, I think. And it wouldn't surprise me if they got above the recent high and then they ran stops and went after this old high over here. But no trade setup for me there. S&P, it's the same scenario. The downside, I think, is they've been trading a little bit weaker than NASDAQ, but overall, the downside, I think, is somewhat limited too. I think if the S&P were to take out the overnight low today and I would see bonds falling again, it would be, you got to watch it on the Fed though, because it could be if the first move is down, I probably don't do it. If the first move is up and then down, then I probably look at it. And there's a reason to that, just because I don't want to sell initially before the 2:30 conference or any of that. So it's not like it's a very tough trade. I would just trade it really small and know that if I saw that reaction in bonds, I would just lean on today's high for a stop. Same thing. I mean, can't hold the 8-day, can't hold today's low. We go back down, I think, to 55.10, 55.20. PAX's big numbers, 55.09. I continue to look at that on my charts. All of this stems from what happens in the bond and the treasury market today. That's what I'll be looking for. I didn't even cover gold or anything today. I mean, I'll throw it up there, but I'll watch gold. But to me, gold is like, it's above everything again. Who knows? I mean, if it makes a screaming bid later, then maybe I look at it and go, okay, that's kind of interesting to see what equities do. But I actually think gold is most likely in a trading range right now near the highs and this recent swing low. I don't see much of it, but I'll be watching it, but not for any leadership. That's what I've got this morning.
Yeah, I mean, in terms of bonds, one of the most important things that I'm looking for really with each FOMC day is, for potential regime changes or shifts in correlations, what have you. I agree generally that, if bonds can find a bid, it should be supportive equities. But always on the watch for the situation where, I mean, let's say he's hawkish and bonds bid off that and equities sell. That then gets interesting. And we saw that either last meeting or maybe the meeting before, where the market was saying, okay, this guy's going to hold tight too long. And that's ultimately going to be detrimental to growth, and bonds actually caught a bid while equities went down. So I'm definitely watching to see what happens, right? The market will tell us what the reaction is and what the appetite is. And I'll do my price monkey thing on it and see what it's doing. But my default would be, in agreement with your assessment that, if bonds are bid, it should be supportive equities here. And if it's not, then we just pay attention and make an assessment on that. But I mean, like macro, Fed, all this aside, I mean, what you have to understand is that we're having meetings to discuss meeting agendas, and we're making announcements about upcoming announcements. And you're bearish? I mean, come on, right? It's just kind of a ridiculous time right now. And, we got that overnight bid, and I make jokes about it. And like, this is why I have to be a price monkey, because, I've got this box. I went ahead and boxed it. We talked about it yesterday morning. Like, this is a perspective range. It's very clearly a range now. And that's where the overnight low, we came in and, the Pakistan, India issue. And we made, we came back into the lows after hours and held basically the same spot. So cash hours, we actually did not fill the gap completely by one tick. That was Wednesday's high. And so we came back down there after hours. And so from a technical perspective, like that move up higher was fine and technical. And again, like that's what but the move itself on like the news, the same recycled news for however many times, it's ridiculous. But it was a technical move. And here we are. We're still in range. And it makes sense for us to remain in range into the Fed meeting, right? I mean, this is important market generated information. So, to me, it almost would have been a surprise to see us break range really in either direction yesterday ahead of today's meeting. So, you're right, talking about first move, second move, third move, 48th move, on Fed. But to me, the trade coming out of today is just this range. And so, if we break this range with continuation to the upside, then it's a long, and you're probably getting somewhere closer to 58.40s maybe. If we break this range to the downside with continuation, then I agree, you're probably getting, 55.09-ish. We've got 55.20 was, basically kind of, the 4.9 high. We've got 55.30s is key and 40s. Were sort of levels we were watching there, but downside break with continuation, I think that's completely reasonable. It's about the same range as we've traded here, like roughly 100 handles, give or take. So if we drop 100 handles on a downside break, that's completely reasonable. I'm generally and certainly in this case more interested in the failed breaks. And I like those trades for a couple of reasons. Let's say you get a failed upside break. So we come up and we take, the high from Friday, come back into range. I'm looking to enter. You've got a clearly defined stop, which would be the high that triggered the false break. And so I've got risk defined anyway. And then for me, I'm looking to get to the bottom here of the range and cover probably most of my position. It might be a situation where I, hedge that edge by taking a long, against it with some different vehicle, but it has the potential to then now break to the downside with continuation and maybe runners get another 100. And so that's why I like and feel more comfortable taking the failed breaks. And the same thing could happen to the downside. And there's probably more of a technical basis for a failed break to the downside. Same type of thing, failed break to the downside and take a long, looking to get back to the top, and then runners for that upside break with continuation. So it's a combination for me, my preference anyways, of having a clearly defined risk, which is the level that triggered that false break of either side. And then also the potential for an enormous reward. I mean, just going from one side to another is 100 plus handles. That's pretty fantastic trade. And then if you do end up getting a break that sees continuation, you've got runners for a lot more that you just don't even have to sweat because you're so far from your entry, it doesn't matter. So to me, the trade like out of today, I mean, that's all it is. Now we could, with Fed volatility, we could kind of, do both. I don't think the expected move is like that big today because, the market knows what the announcement is going to be. The issue is like, what's the pressure? And so it's possible that we're underpricing volatility for today just because the market can react so wildly to what he says and how he says it. And, the bond market might move meaningfully off of it in either direction. And, that could, then produce an outsized impact on equities that perhaps isn't priced in. But to me, I'm just waiting for generally the end of the presser, unless I see like the perfect setup while he's jabbering and I'm feeling a little bit frisky. But to me, that's what the trade today is all about, kind of in the big picture.
Yeah, let's dig inside for the morning session and see what you'd be looking at. I'm with you. I think today, if the bonds were to break out or something were to happen before the presser, it's just impossible to trade it. It has to be post-presser and actually probably several minutes into the presser if I start to even look for a swing. Now, remember, my stops are a lot wider than most people's out there, so I have no problem clicking in with a small position, even sometimes like a one lot just to start, if I'm trading 30s or NASDAQ, and just, put my wide stop in and see how it goes. Because I do think it's unfortunate kind of that today I feel like the market is in an area where I want to start looking to put risk on again because I haven't done much lately. But it's like you got to be really careful that first move reaction off of this Fed announcement between 2 and 2:30 isn't a total, lean in the wrong direction. It's like it's got to be post presser for me. I think that's where at least the action gets a little bit. It gets a little bit better because we've got to be behind the news a little bit, because even Mike said this morning. I mean, the machines are going to react so fast that it's like I don't want to be at the tail end of any move, because then you're just sitting there choking as it's as it's going against you. So important for everybody, I think, to think about that when you come into these FOMC days. 2:00 announcements, it's just the starting point. It's after the 2:30 presser where things start to really heat up. All right, Pharm, let's take a look inside the tape today.
Yeah, I mean, so before the presser, we can certainly expect, I think, two-way action. I mean, the first thing I would keep in mind is that, look at this. This is a 30-minute bar from the 6 p.m. open last night. Everything to the right is inside of that. So our strat traders would call this a mother bar. Sarah, shout out to Sarah, big fan of Sarah's. And when you see that, you tend to get a lot of chop. And so that's the first thing to keep in mind, like having a conviction trade on while we remain inside this bar, is probably not going to work out the way that you think. It'll just, potentially be a little bit choppier. It doesn't mean that there's not fantastic trades. It just means that until we break one side of this, which, the bottom is at like the bottom of range, we're not really going anywhere. So, talking about first moves then, what did this generate? So here's your overnight profile here. And so there is some profile down here, believe it or not. You just can't see it, right? Because the move happened so fast. And so it forms somewhat of a P-shaped profile, which is indicative. Generally, most people would say of short covering. I would more generalize that and say that is indicative of forced buying, which can be something other than short covering. But anyways, effectively, if you lose the meat of this profile, then this move can unwind here. We also, combine that with trapping back inside value from yesterday. We could potentially then get sucked down to the other side of yesterday's value. And so like this low here was basically at yesterday's volume point of control. So to me, we could see here into the open, we've got 30 minutes. And then at the open, any failure to reclaim, I'm going to say I've been using 52 to 55 for today. Any kind of failure to get through there, and then continuation lower through, this current swing low, then you're probably looking at 35 and maybe 27, I would say would be like my targets. And there is the potential for it to come all the way back down. But, again, being inside this enormous bar, you don't always get the clean move that you expect to get. So that's kind of like an early day, potential trade back above these 52, 55s. I mean, you can see these 60s, kind of like 65, 63 has been kind of stiff. But I think back over here, after the open, back over, 55s anyways, we could find a fresh rotation up towards those 80s that we talked about yesterday, 82 to 85. But this is generally two-way trading in this range. Seems a little bit heavy working towards the bottom. Maybe we get that breakdown early. But, again, after that first move, then we're looking for the counter move. And you can probably just play yesterday's profile. Because, again, if we break this range either direction to the upside or the downside back from the daily, like before the announcement, that's kind of going to be a surprise to me. I mean, I don't understand why the market would do that. That would be very, very interesting to me. And I don't see that often. So just like yesterday, I said, I'm not looking to be short anywhere near that bull gap. I'm not looking to be long anywhere near the top either, the top of this range. And so I would be pretty surprised if this breaks to the downside. And if it does, I think we better pay attention. And if it breaks to the downside before FOMC, and then it sustains it on FOMC, I would see that as really, 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 really bearish, because it would suggest to me that the market really didn't care what he had to say, it was ready to sell finally, because this has felt heavy and somewhat distributive at times. Though, I mean, again, I can't really be bearish given the fact that we're announcing upcoming announcements and we're having meetings to discuss what we're going to talk about. But it has felt heavy at the highs, and that's my slight lean is that we are seeing some distribution. So that's why, like, I kind of like the failed break higher if we get it. But from a technical perspective, a failed break lower might make a little bit more sense. So that's where I'm at today, the big picture, and then, like, you know, what could the first moves be here into the open and just after the open.
Yeah, no, you're right. I mean, this morning, what could get interesting is, as I wrote in my note this morning, it's Fed day today, but it's tariff day tomorrow and beyond. You don't know what other announcements. You know, President Trump doesn't like to share the limelight with anyone else. So it'd be very interesting to see if he comes in and says something or does something pre-FOMC announcement. That would be something. You never doubt what can't happen in this tape. And that's why always have your guard up, everybody, because even though you might expect it to be quiet going into a Fed meeting, you never know what could be right around the corner when it comes to an announcement. But thanks for the technical side of things, Pharm. You know, we do this every day, Monday through Thursday, 8:30 to 9. It's always great to speak with you. Great having you here on Fed Day, as it is with all days. And I appreciate your insight as usual, my brother. Make sure everybody you go out there and follow Pharm on Twitter. He's one of the best. He's my guy. Thank you so much for joining me today, Pharm.
I appreciate you. You take care, Deli.
All right, next up we have Tanya Trades. Now, everybody, hit that like button. We've got Tanya coming in here every single morning from 9 to 9:15, giving us her insight on the market, and we always enjoy having her here. So show some support and hit that like button. Tanya, good morning. Happy Fed Day.
Happy Fed Day. It's a new day. It's a new dawn. It's a new light. It's a new session. We got this. I mean, it's an interesting day with interesting structure, to say the least. Yeah.
Well, let's take a look at that structure. If she says it's interesting structure, let's take a look. Let's go right into it.
Yeah, we can just go right away in it. Well, like we talked about yesterday, my first target was those 4-hour lows. So it's a little bit interesting here because, okay, I've been talking about this for a few days now, how NASDAQ took this April 2nd high and the S&P 500 did not. And I anticipated that to be perhaps a local swing high, which we did. We did fade a little bit from there. And then yesterday, if I go to the 4-hour, I said this was like the easy target here, this 4-hour low in NASDAQ with a liquidity pool beneath, right? And what is super interesting now to me is that, well, the S&P 500 did not reach that 4-hour low while the NASDAQ did. So now we have a divergence on the 4-hour and so we have one on the daily and now on the upside and on the 4-hour on the downside. So to me, that's really signaling a 50-50 market environment, which I don't really love because, for example, yesterday I came in pretty bearish with this target. What ended up happening, actually, you guys, I did not end up finding the short to here. And I said, okay, then I'll wait for the reaction there. And then I was spotting those that divergence. And I said that could be the start of a reversal. And we got a nice little reversal there. However, now that reversal, you know, that target has been reached on the 4-hour as well, which is this like little gap volume imbalance here on the 4-hour. And we made a swing high in here. And we did not take out the previous failure swing here. So this is really just like a 50-50 environment to me. I'm not coming in with any kind of bearish or bullish stance this morning, as well as kind of looking at, okay, we have FOMC rate decision at 2 p.m. today. So the morning could really be back and forth because of what I just said. There's a divergence at the high there on the daily and now at the low at the 4-hour. So, and then we're kind of bouncing between areas of interest now where, okay, this area of interest to this one, and then now to this one, and then now I don't know. Now I have to kind of go on the smaller time frames for a point of interest, which I don't really love doing because it's lower probability. Just going on a smaller time frame is just more difficult trading in general. So now it's like, okay, is that divergence at the low going to hold? If it doesn't hold, then I think that we're gonna have even more downside, right? So if we end up breaking more structure, like ES could then play catch up to the downside. I'm kind of, like I've said in the past couple of days, you guys, I'm interested to be seeing, like, is the S&P 500 now going to be the stronger sister, out of the NASDAQ and the S&P 500? Because recently it has been. Yesterday I took my long on ES, and it did reach the target faster than the NASDAQ did. How the NASDAQ trade still worked out, but for me, the RR was better in S&P 500 also, and I had better confidence that low was going to hold because it was stronger. So, here going down to the 1 hour, I don't see much that I like. I don't see any, because what I do is I look at swing highs, swing lows, and imbalances. So I don't see anything that's kind of holding that might hold price up for a bit. So let's go to the 15-minute. Yeah, we had that huge pump up at the open there, at 6 p.m. I remember I was on FaceTime with one of my trader friends. And I was like, wait, are we, what's going on? What happened here? I don't even understand that one. That was a crazy pump, actually. From 800 in 15 minutes, we had a pump up all the way. It's kind of crazy how that ended up going back to here in about 330 points in 15 minutes there. One thing I do like is that at least Asia and, I mean, for the most part, London consolidated. So, I mean, all I see here pretty much is this 15-minute FEG, but then you have this entire push up there. I don't know where price would even, within this huge gap. Like, what are we going to do with that? I don't know. I mean, we could easily take this low out, honestly. And yeah, I mean, I don't see, if I'm going to go back to the daily now, actually, let me see. Forgot to look at the daily too much. I mean, it did for the divergence there, but yeah, we can come back down into this low, yesterday's low. We have this volume imbalance still that we didn't close within it. We could dig again into this area. I would probably have this 650 as a potential area where we could, like a sensitive area, this candle's close. If we had lower, yeah. But honestly, this is like literally one of those days where I'm like coming into the morning and I'm like, I don't like any of the structure this morning. I'm not coming in with any kind of strict bias, and I don't even think that, I mean, this is where I'm like, this trading is lower probability. It's a 50-50 back and forth tape, and I can't come up with like any good quality type of idea. So why would I really put a lot of risk behind that? So if I do take a trade today, I'm going to go with half of my regular risk, considering all things considered, with FOMC later at 2 p.m. There's like, and also with the structure where I'm saying like we could just be bouncing between, I mean, we could literally take out this low and then bounce again, take out a swing high. I do anticipate that kind of to be the feel of the morning, and we'll kind of get the feel in the first 15 minutes whether it's going to be a quick move in one direction for a potential reversal play or continuation, or is it just going to be, barcoding, bouncing around, which has been a little bit of the theme. Well, yesterday was a little better, actually. Yesterday was that's why I liked yesterday a lot, actually. Let's see. Just like a little comparison there. Is that yesterday was a pretty fast open where we went up into taking some trendline liquidity highs. And then we had a fast drop down to that point of interest, actually. And then, the reversal trade I took, yeah, it was nice and clean. It took 14 minutes to take back to the upside versus maybe on Monday. I think I was streaming on NinjaTrader. The same kind of trade took like 37 minutes or something like that, like 27 minutes, and it just reached one first target, and I took a discretionary close in a kind of market where it was really back and forth for the first 30 minutes. So that's where I'm going to be taking a feel for the vibe of the market. But coming into the day, I've had really low expectations because, like I said, we were just bouncing between these zones. I've marked down the blue. And that's literally, it's setting up a range trade. It's setting up more liquidity to be generated for FOMC to take out some liquidity later. So yeah, I marked out this 15-minute, but yeah, where are we gonna put? I don't even see us potentially bouncing here. Like maybe you could find a trade to go for that low, but again, like because of that divergence at the low, I don't really like that really. So I don't really love it, but that's what I'm bringing to the table today. What are you thinking about that, Deli?
First thoughts are, how lucky is Kane to come in FOMC day again? And we're looking like we're caught between a double divergence. Lucky him. I'm sure he's thrilled about that. But he's coming off the F1. He's probably relaxed. I'm sure he's got some stories to share. I look forward to that. But so a couple things. First is I'm glad that you said you take your size, half to half size.
Yeah.
Because it's important. A lot of people will come in, pre FOMC, shoot themselves in the foot when the market action will come later. Understand that if it is barcoding and you see a setup that you're like, you know what, I like it, but I don't love it, I still want to do it. Sometimes I don't think it's a bad thing to get into some rhythm and just trade really small and just use a minimal amount of risk. I think it helps people build rhythm into the day. I've always found it's hard to come in completely cold into a FOMC meeting if you're an active day trader. That's the first thing. Second thing is the poll today, Tanya, because I love going over this with you every day. Almost 550 votes at this point, 40% bullish today, 30% bearish, 30% neutral. Everyone's leaning a little more bullish into Fed Day.
All right, that's an interesting poll. Well, also to comment on the Kane coming in. I mean, sorry, buddy, that's what you got on Wednesdays. Wednesdays are going to be your FOMC days most of the time. He knows that though. He's doing totally fine. Just like I know for Mondays, typically there's actually not going to be too many days where there's red folder news. It's probably going to be a little bit of a slower vibe. I do like what you said about you're okay with taking a couple of trades and just to kind of get a feel for the market. I do like that. And taking a vibe check, like a temperature check, and just taking smaller size, even if it is like even a quarter of your regular size, because then oftentimes you get a better feeling for how the market is moving is when you're actually involved in the trade. And in that, when you're taking that trade, you just have to have the expectation, okay, this might be a loss, or I might take a couple more losses. My win rate might be a little lower than usual in a new market environment, or an environment where I know it's lower probability, or their market is just doing some price discovery. And that's okay because you have to set your expectations. If you're setting expectations differently, then that's where you get in trouble, because then you start getting all up in your head about it, and then you might overtrade or take larger sizing and just really get lost in the sauce, and you don't want to do that. So I like what you said there. And the poll, I actually like that. It's kind of split up though, pretty three-way there, slightly bullish. I do understand why it's slightly bullish. We had retraced into the 4-hour gap. We had a nice push up higher. I mean, yesterday that was the low, basically, was where NQ took out that 4-hour low. It's kind of crazy how it does that sometimes. Like this is that horizontal line. We just removed this, and then that was the low of the session, and we had a really nice rip up. So, and we've been holding that for now. Although right now on the 15, it does look kind of bearish. So that's why maybe it will have another market structure shift to the upside, but maybe it'll be delayed for later in the afternoon. We'll see. Today is a day I'm taking a little bit slower. Not going to be any kind of rush. Maybe I won't even it's more likely maybe I won't even take a trade this morning. It's better sometimes to, wait until FOMC, or, if I want to take a trade, maybe I'll take it really small size, or even, I never really take a paper trade anymore, honestly. So maybe just like a quarter size or half size, just to get a feel for the market, like you said. And yeah, we're gonna have to see how today pans out. I'm more neutral than my last few days in this pre-market outlook than ever. So
Yeah, I mean, and the poll is neutral too. Like we said, now it's 39, 32, 39 bullish, 32 bearish, 29% neutral, which is, for all intents and purposes, it's pretty even, you know. I love what you said, lost in the sauce. I'm using that. That's like, that was great. Yeah, you know, and I've learned so much over the years just from literally putting on a one lot. Now you've got micros. I think that I'm a big rhythm guy. You know, even though I moved it into swing trading, sometimes I'll just come in and I'll swing, you know, a few micros for me, and I don't ever even really trade micros just to kind of just get my footing. I think it's so important. You know, you're not going to put on a ton of risk, but sometimes you do it just because you feel what the market is actually doing. And I know everybody tries to be so technical and talk about everything about strictly following the process, but there is a rhythm to this business. And in my experience, you know, over the years, you know, when I'm in good decision making and good rhythm, good things continue to come. It's when I get out of sync and I coming in and, you know, I'm just not, and I would say again, in rhythm is when I typically struggle. So on a day like today, if you're going to be trading all day, again, not recommending you come in and trade pre-FOMC if there's nothing there, but there's something there, not bad to take your size down, you know, 80, 90% and just do something really small. But again, we'll talk about this more as time goes on, Tanya. Love having these conversations with you. Monday through Thursday, Tanya's with us from 9 to 9:15. And of course, she streams with us all day Monday. I know a lot of people, I see in chat all the time, people saying that they're dual streaming. They've got Tanya on one, and then they'll watch who's in NT Live. And we love that. And we love that people go to your stream because you're great. And we love having you here. So have a wonderful day, and we will see you tomorrow.
all right, good luck, good trading, everybody. See ya.
All right, folks. Chat's ready. We need to get another 100 likes in here before we bring Kane in. You know, he gets real sensitive about this. He likes to have the most likes. He likes holding records. We all know this. Let's get the likes up. He's coming off of F1. You know, he's probably just off the plane, enjoying the life in Miami. I can't wait to see, you know, if he looks fresh for the FOMC today. Hit that like button, as because we are now getting ready to bring in Trader Kane. There he is, man. I was waiting to see. I'm like, he's going to have an F1 hat on or something. What's shaking, my brother? How are you? How was Miami?
Miami was fun. Yeah, it was good. It was good. It was an in-and-out trip. The jet lag really kicked my ass yesterday. But yeah, no, it was fun. It was a fun weekend. Busy, in and out, and back to the hustle and bustle. Going on holiday on Friday. What about you? How was your weekend?
It was great. You know, I tuned into F1 and I have not watched it in a lot of years. And I watched how McLaren just dominated. I mean, those guys are good, man.
Yeah, I mean, look, McLaren a couple of years ago, everyone was like, are they going to turn it around? You know, they had Daniel Ricciardo, and you know, I like to see them come back. You know, the legacy of McLaren and everything they've achieved over the years is good. And it's good to see them on top. To be honest, it's just good to see not Red Bull on top, because I can't describe how much I hate Christian Horner. Like, that guy's arrogance is just ugly. So yeah, no, it's nice. But yeah, the Formula One was really good. I'd probably do it probably a bit more higher style next time. But yeah, no complaints. The weather was good. It rained a little bit, so I took the weather with me. And I don't know why, but every time I land in Miami, it rains. So I think it's just me, to be honest with you.
Well, it's what happens when the British come over. They come overseas. They come back, and then you guys bring that weather with you.
Yeah, it seems that way. But Yeah, what a time, eh? Every Wednesday, once a month, once a quarter. There's just always something on Wednesdays that I dread, and this just happens to be the day. And today it's Fed. So how exciting! I
Yeah.
actually am long one right now. One's just my standard size for FOMC days, but I just accept that it's probably a bad day for me. So I just typically de-risk completely, just go one, feel the pain of the market. Because if, I've always had this is the days I don't trade FOMC days, I'm like, wow, it was clean today. And I'm annoyed I didn't trade it. So over the years, I've just learned to just take the pain and the W's just with smaller size and hopefully come out the day green, however that looks. But yeah, I took a small loss during London, and now I'm trying one here. And I basically just want to see us reclaiming some of these highs. Probably not going to happen in transparency, but like I said, I'm happy to feel the pain of it. What's my feeling coming into the Fed? I'm sure you're going to ask. I'm almost like got this slight feeling they might have a surprise cut, and I know I spoke about this before, but I just, everyone's screaming for these rate cuts. They're always late to do them, especially with the current Fed. They're late to do them. And when they them, they do them heavy, and then they regret it because they were late. And I think it's just a tale that's gonna play again, and it's probably going to be a bad red day overall. The FOMC comes in, everyone's expecting rate cut. We get surprise rate cut. The market likes it for the meeting, and then it just absolutely falls off the face of the earth. So. Yeah.
That would be something to see. That would be something to see. And I actually don't doubt that scenario could happen. I mean, I never doubt that anything can happen, but I actually think that is, I don't know what percentage I'd put on it, but I think more that the rally initially into a break could be, that's kind of the way I envision it. Sometimes we have these visions of what we think the day could be. And to me, because the momentum has been so much to the upside, it wouldn't surprise me to see a stop run higher, get back into range, and then all of a sudden have somewhat of a capitulation type top on a Fed day where all of a sudden the market starts to finally retrace, and that retracement could be significant. But who knows? I mean, this 230 presser is going to be really interesting. This morning we had some people talking about the macro side of things. There's just so much going on. And, I don't know how much the Fed, we know that the Fed matters always, but today could be one of those things where the Fed does do little or something. I don't know. It's always a guess, but it does set some sort of shift in technicals for the market as we start getting back to tariffs, because I think it's coming, Kane. I think, look at somebody said, I think today was day 30 from the 90-day pause. I'm not exactly sure, but you think about it, we're only 60 days out now of when we have to start getting some, closure on this, and it's going to get interesting.
He's got to do something, right? Like I watched that Canada presser yesterday, and just like the amount of times he tried to press this guy to basically sell Canada to the US is just phenomenal. Like the guy's like, the Canada's never for sale, and he's like, never say never. It's like, God, like they're clawing at something, and we've said it all along. At some point, these rumors are going to start. They need to factualize into something, an agreement being made, whatever. The market's going to get bored of knowing that he's going to talk with all of the countries that he's imposed tariffs on. They're going to get bored of that. And, eventually, if we don't start to materialize into these talks actually coming into trade deals, the talks are actually going to start to have a negative effect on the market, because it's just another thing that pumps, you fade it, and it just falls through the floor. So, higher level, where are we? We're sitting around the high where we absolutely got killed by tariffs. We're sitting around that 50% retracement of the overall range. We're not really going anywhere. Okay, fine. We got some good news on Friday. It took us higher. We're currently within this previous week candle. I would expect us to trade lower before going higher, ultimately. So with that being in mind, based on the current candles that I'm looking at, I'm expecting a bad FOMC. What would be bad? Surprise rate cut. It'd be bullish, but I think the market would hate it. That's just how I think. It'd be bullish for the economics to go down to then go up, right? But the market would hate the surprise rate cut because they're late. They're admitting they're late. They've not priced it in. So then it just, for me, it just goes lower to go higher. And that's currently what I'm what I'm framing. You know, all I can really do is act on what I'm given. And right now, the chart isn't really giving us much other than telling us we're going nowhere at a key level, and that's not normally a good sign.
Yeah, no, always hard to navigate the morning before Fed, but like we said, President Trump has been he's going to start getting more and more active. And I said this earlier, he doesn't like to be in the shadows of anyone. And today's FOMC day, you wonder if he puts out some tweets prior to it, like the Fed should cut rates, or he says something like we're close, or what have you, and it jars the markets. So we're always ready for that. Before I let you go, I know we're only about 5 minutes out to the open. Everyone's talking about it. So what did you got? You got a new set of teeth. You got this new smile coming in from last time. You had to leave right afterwards. Or look at there he goes.
Yeah.
Look, you think I wasn't going to bring this up? Come on, look at him. He's never smiled more than he has in the last few days.
I have. Hear me out, right? So there's two things. I had a fake tooth on my front right, so it died, so I needed to get it replaced. And then when I went to get it replaced, the dentist had told me that my other tooth had actually died. So he was like, you need to get both of them done. And I wasn't going to have one tooth ripped out that was just there. So we opted to have smile veneers. And I was like, kind of put them in, was like, not really like it. Can kind of see the difference between the other teeth. So for the last, I don't know, 2-3 months, I've had a bottom brace on, which was excruciating because I had it done to a really tight setting to get them ready. And then, I had a non-invasive veneers on all of my teeth, basically all my top teeth, my bottom teeth, because I had to get the brace off before the mold. They're getting done shortly after, so they'll be done next week. But right now, I have pearly, non-invasive veneers on the top of my teeth. Yeah, and before you ask, they cost a lot of money. Yeah, they did. Yeah, they did.
Yeah. Well, you know what? I'm noticing he's spending more time on his hair. He's trying to get whiter teeth. I mean, I mean, this is Kane. I'm getting worried. Getting concerned.
I am going to be the host of the NinjaTrader show eventually. That's my goal. I'm trying to leave the trading stuff behind me. I'm just going to move to Naples.
He's squeezing me out.
Chill in the sun. You got to retire eventually. You can't do this forever, And I'm just trying to live in your shadow for a little bit and then rise into the sunlight eventually.
You see, he comes over here to Naples. We go to dinner. He sees everything I'm doing. He's like, you know what? This isn't so bad. All of a sudden, hey, I'm gonna get in teeth. He's doing his hair more. Like I said, it is a little concerning. But all kidding aside, I love Wednesdays, and I love having you come in on these days because I've always said this, that one of the greatest traits for you is your confidence, your commitment to what you're doing. And it doesn't even matter. And I always say, nobody gets chat more active than you. And no matter what anybody throws at you, you stay true to who you are. And I love that about you and your trading style. So I always appreciate it. And there's no one better to take us through the morning on FOMC day than you, Kane. So chat, give him some love. Make sure you follow him on Twitter. If you're not, check out what he's doing with the lab. Give him hit that like button for him, as he knows he does hold the record on NinjaTrader Live for most likes and most chat comments, and he wants to maintain that status.
We're going to go for views soon. Don't worry,
my brother.
We're just waiting. We're going to take all the records at once. So we'll be in influencer mode today. Don't you worry. You can rest easy. You can go. Sip some cocktails on the beach. And be back soon. Yeah.
All right. You're the best, Kane.
Appreciate you, brother. Speak to you soon. Chat, how are we? We are definitely going to be in influencer mode today, so we can just already smash the like button. We can get active in the chat because it is going to be a boring day. It's very, very low risk for me. It's not going to be something that I'm looking to push the button on or chase the market. We're going to just wait for a setup to appear, low risk. We're going to take it, and what happens. Because these mornings can really crush you, right? So we're kind of long just before the open, which is never a good thing, but we accept it because we may just go straight up, we may just go straight down. That's part of the game, right? So small risk right now, not looking to burn a hole in my pocket. But the model, if it plays out, I want to capture some of the moves, so we'll see. It's going to be very boring until FOMC. We just need to find some some things to talk about between now and then, because I imagine trading is it's not going to be that fun. Khan loves FOMC opens. I love that for you, Khan. I love that. I'm basically trading. I'm framing a reversal out of basically a reclaim back above 20k. I don't really care how far we go above it, but when we open up after this big pump yesterday, some announcement, I don't really care to know what it was. Didn't look at it, so I imagine it was some deal with I don't know. Yeah, I'm just making it up. I literally haven't even looked into it. I don't like the fact that we opened so low and pushed so high. We might retrace all of it. However, we've retraced a significant portion of it. Asia range failed to close above. We swept some 4-hour high in here, right here. 6 a.m. opened, and then yeah, we're trading lower. I'm a mean reversion guy, so ultimately I'm looking for this to play back up. And my entry here is a 3-minute inversion with this hourly candle, current hourly candle printing to the lower side below this one. So it's a trade I will always take because these candles typically buy back up, give me a chance to go break even before pushing. And in the eventuality they don't, I'm wrong, and I just accept it and move on. So yeah, it's going to be a pretty boring day. Hey Tracy, how are you? We opened up above previous day high and basically sold straight out of it. So opened up to previous day high, selling out of it. So right now, it's not looking too good for bulls. I want to see some of this liquidity in and around here taken before we can look to get short. We retraced into 50%, 50%, 50%, push lower. That's kind of what I always look for, right? And the reality of this is I might have just been early on this. The high of the opening range aligns with this now, which is never really good for me. I literally got stopped out and then push. It's looking like a pretty good buyback, so I might jump straight back into it. But sadly for me, I need to wait for the next minute close before we can even touch it. So how do you connect NinjaTrader with TradingView? When you open up NinjaTrader down here, it should just say trading panel. And basically what you end up doing is you end up looking for NinjaTrader in here. It's a little bit laggy with the open. NinjaTrader, it's a TradingView problem, not a me problem. So yeah, you go down there and you connect it up. You log in with your NinjaTrader credentials and yeah, that's it really. Good morning, good morning. I didn't get shorts this morning actually. No, because I wake up at 3. Well, I'd say wake up. I get on the market at 3, stayed till about 4:30. We were looking for some sort of longs in here. We actually got long on some pullbacks and then basically got stopped before. Oh, wait. Am I supposed to be in this? No, we didn't get a closure above. That sucks for me, but it is what it is. I imagine this is going to pull higher. We got a nice break above here with this candle. Very, very bullish. Lots of buying, I imagine. But what do I know? I'm just a basic candlestick trader, right? Right, order flow guys. Am I right? It's my VWAP. I'm an order flow trader now. Thank you. We should put these on for all of the order flow guys. Am I doing this right? Anchored. I want to anchor this. Yeah, there we go. It's not order flow. I know before we get crucified, it's just a running joke that I have. Don't worry. I'm not actually believing that VWAP is order flow. Don't worry. Kane must be long here like last Wednesday. Wait, Tanya said last Wednesday I must have been long. I think I was long at last Wednesday, funny enough. This is this week. Last Wednesday we caught that long at 10 a.m., right? We did catch that long at 10 a.m. Last Wednesday, 10 a.m. There you go, right there. Boom. I think we bought the low of that candle at 10:15, 10:05, yeah. So yeah, we were long last Wednesday actually. They can't really make up their mind what they want to do with it. What's CS doing? And also not making up their mind. Yeah, I caught the low of day last Wednesday. Yeah. Yeah, look, I am. The reality of that is Furman, or Firmament. Well, yeah, dyslexic, give me a break. Anyway, I actually do want to use the tape to tighten up my entries. So yeah, it's something I've been looking into. But it's not something I've actually been trading. You know, I'm not suddenly trading absorption and this and that and buyers and sellers. I'm not naive to the fact that it's a bit more difficult than that. So get a break here, then I think we just play 10. Don't really want to be a buyer if this breaks because I'm against everyone. Sellers at the open are just going to probably kill me if I get long. I want to be a buyer above today. Buyer above, and then at 10 a.m. we can be a buyer again. Right now, that's the plan anyway. What's the chart doing? Swept the 4-hour open, trading lower, framing some sort of pullback, and if not, then yeah, turn on the volume indicator. I'm good actually. Thank you though. I appreciate that. But I'm good. I'm good. No, I literally I really like to trade premium discount. I like to trade those 50% retraces. And if I'm wrong and we look to just go lower, then that's it. But also I like to just, so for example, 9 o'clock opens right here, offers no ability to sell above. You have to sell below the open. I don't believe that that's a good thing. So I like to be a buyer below opens if we don't sell, if we don't get the opportunity to buy higher, because right now the only people that got to buy above this was, or sell above the open, were this area right here, and that is a whopping 1 point. Yeah, the reality is not many people got to sell there. So for me, it's just a reclaim above. If 9 a.m. flips bullish, then at 10 we should at least buy up, and if we get above the 4-hour open before 10, then it should confirm some sort of swing to then play higher. We have SMT at these lows. We have divergence at these lows, SMT at these lows. ES is running the 930 candle that was set, running these lows, reclaiming, showing NQ being a little bit stronger for two correlated assets. There's no solid reclaim, so this isn't set in stone in my head. So right now, sellers are definitely in control. Do I have a video explaining my strategy? I'm sure there's one somewhere on the internet that someone leaked somewhere, but I personally haven't done too many of them in the public domain. And that's not me trying to sell you something. That's just me answering your question. How's Miami? Miami was very good. The weather was very good. It was very humid. And yeah, overall, big fan of Miami. But what's new? It's kind of hard to hate Miami if you're just visiting. Don't know if I could live there. Still trying to figure that out. We shall see. What time frames are on the chart? It depends. This changes. So this is the 15-minute candles right now. These are the hourly candles. Actually trying to I'm trying to actually just frame this trade, but I appreciate that, HT. Forever trying to do something different in this space, so appreciate that. How did I like trading from Cape Town? Yeah, it was pretty good. I made well over $1 million in a month trading in Cape Town, so I can't really deny and say that it wasn't great. The time zone was pretty good. Gave me the morning to do whatever I wanted before London Open and New York Open, so it was nice, to be honest with you. I would say the time zone that I like trading the most is actually Dubai. You get so much time in the morning. London session is basically around lunchtime, and then New York session is around dinner time. So get to trade just before going out for dinner, and then you get to go out. So yeah. I want to see a good 3-minute closure above this level, and I'll click the button. Not really framing the 15-minute PO3 right now, though. I imagine there is a 30-second inversion in here, though. Right here. You got to long here. Invalidation below this low. Bit tight, but you could have taken it. I don't really like them a whole bunch of the time, though. Yeah. Yeah, Max drove really well at the weekend, actually. Defending against McLaren. It was really good. You know, it just shows that he is such a good driver because that car is not very good right now. That's bad. These are both buying, but I'm definitely going to do this. Would I move to Dubai? Probably not, to be honest with you. I don't know. I don't know, Fanny. I don't know. I truly don't know. I've only ever visited Dubai for work reasons, like for an event or something. And the reality is I don't know if I would enjoy a whole bunch because it's a bit pretentious. And don't get me wrong, I can be a bit pretentious at sometimes, but I don't know if I could make it my personality. What am I looking at the chart? Just a bunch of candles. Not much, to be honest with you. Just a bunch of black and white lines with a bit of blue and a bit of orange. Somehow my brain makes sense of it. Don't know how. Just haven't figured that bit out. If you ask the general public, they would just tell you I get lucky a lot. So I'm starting to believe that, to be honest with you. Just a guy that gets lucky. Blissfully ignorant is the term I'm adopting. Ultimately, what I'm really looking for is this hourly low to be confirmed. That's it, really. I want to be below. I want to be a buyer below an hourly low. When we get an open below a previous hourly low, and then we start to buy up, it suggests to me that we are reversing in some way. I'm not looking potentially for the whole high. What I am looking for is I'm looking to get into this entry before we tag 9. If we tag 9 and come for it, then I'm not necessarily looking for it. I may look for a different entry at 10, but then if we don't close this by 10, or at least some of it, it's a bad trade for me to take, especially on a day like today. Yeah. Yeah. I know what you were saying. You just asked it really badly, but yeah, I'm looking for basically a mean reversion back above 9 a.m. open. 6 a.m. also didn't really do much for me. So really what I want to see is I want to see that 4-hour low traded above by 10, and I want to look to get long before that time. And if not, then I'll look to get long above. The reality then is my invalidation for the trade is quite large, so I'd have to see a big buyback, and then get in. So you see ES is already trading above that 4-hour high. So ES is showing strength. NQ is lagging a bit. We tagged the open. It's not looking too good for me, brev. Dubai is where all your friends who haven't followed the law go on the run to live. There's no extradition. Bad news for your friends is there's definitely extradition. So, and they're definitely bringing that in. So it's not a place that harbors criminals. They're very much against that. So Kane, dark soda is bad for teeth. Tell my dentist that because I cleared it with him. Yeah. I don't care about the no wick on the ES daily open. Not really. Not really. All I want to see is a pullback into some sort of here to then sell it down. That's all I really care about. I don't care that we are not necessarily bullish right now. We will see. We will see. People forgot Hush Puppy already? I have no idea what you mean. Anyway, we're only on 481 likes. There is 1,460 of you in here. So 1,000 of you are sleeping on me right now. So it's not looking good, chat. You might have to get those like numbers up. I know what you're thinking. Kane, wow, is that 1 mini? Because that was a good bounce. Just know somewhere, somehow, my trades are sized correctly and the market just can't go against me. Just know that, okay? This may look like 1 mini. It's maybe not 1 mini. Maybe it's 1,000 in the background. You won't know. So, but yeah, it's just 1 mini. Good bounce, though. We'll see. Will it survive? Maybe the market makers are on my side today and they're going to reward me for trading pre-FOMC. We can hope. We can hope. They're going to bring it back down for a VWAP test, an anchored VWAP from the 9:30 open. I don't know. I don't know. Why am I entering at this place? Jordan, I don't know. Truthfully, I don't know. It just seems I've got very lucky on this 1 minute candle at 9:46 today. What I am really looking for is an hourly low and then a reclaim above the hourly open. That's literally it. I mean, look, this is an insane entry. Did I predict that it would tick? No, of course not. It never does this. It's like completely rare. However, my low is currently the SMT low. The low is currently the SMT low for me. This was the low made on ES. You have equal lows here. Don't really care about those. And then, yeah, I just basically want to wait for the break. Basically, blah, 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 blah. I want to wait for this hourly low to get swept. Look to frame some sort of reversion back towards the open. If I'm right and we trade towards the open upon the print, I should be able to go break even here if I'm in the wick of the candle. That's it. That's genuinely it. Like, and then all I do is I start to frame that trade within 50%, right? So if we look here, and again, people are going to be like, that's so basic, Kane. How is that possible? I don't know what happened here, but we just died. It is what it is. I'm just going to accept my fate if it is the case. I don't want to put premium discount on. 50%, we trade into 50%. at the close. Okay, so we push all morning, 9:45. We push higher. We trade into 50%. This range has been efficiently delivered, right? This 50% here has been efficiently delivered at 12 o'clock yesterday. Yeah. Then what happens? We then push up after our aftermarket. I'm about to get slapped here. Don't know what happened. Don't really care. We'll look into it in a second. Then at this point, all I want to see is this be a 4-hour low. So at 2 o'clock, yeah, we set that 4-hour low. 6 o'clock comes on. All I want to play is the reframe of this low. So the lower that we go, the more I want them. The more likely it is I just want to see a mean reversion back towards some sort of level up here. Yeah. So this is the 4-hour open in a 50% range. So all I want to see and play is that this gets reclaimed. And if not, like we are now, then what happens? We close below it and we look for 10 a.m. to sell down into this low. I don't know what that was. I was too busy showing something else. But the idea really isn't validated for me, 3-minute inversion and sell. Yeah, maybe. I doubt it very much though. No. It's probably more like a 5. Struggling to get above 5-minute inversion in the open. It's probably just the open. Right, so that's all I do. And then I just trade 50% of this, right? Trade into here. And then all I look for is I look for 50% of this to get traded into, which midnight is around the area that I like. That's it. Like, and the thing is, you're not wrong. You're not right all the time, and you're not wrong all the time. Why? Because the market's typically delivered 50% of their range, right? So that's it. That's literally it. That's all we can really play. It was a pretty heavy dump though, or I say dump, heavy pullback. 300 ticks, couple of 100 points in a minute. No, just about 100 points. And we're already back above that level. Guess what though? I probably will try it again if we get it. If we get back above here. ES really failed to close. So I have right now in my head, there's one of two things, right? If ES gets on side, I'm very wrong. And if not, and we're basically we're going to pull back into 50% of this, we should do it in around 9 minutes. So now for me, if we get a closure above here, I'd probably give it 5 minutes to run because we could run into this level within the last 5 minutes of that 4-hour candle. And if not, we go lower and then 10 a.m. we look for open high and then close low. That's it. That's simply all I look for 99% of the days. My man went in that trade like a millionaire. Fair enough. It's around 50%, yeah. I like a high within 50%. So, for example, today we have midnight just resting there. That also rests around these highs. And if I go on the hourly chart, we have an hourly high resting right around that area. So I'd like to see it trade into or as close to this area as possible. We'll see. We'll see. You would re-enter like this with your full size too? Yeah, I don't like, guys, there's really one thing that like for me, I think that a lot of people struggle with this is, did this happen because price was really bad or there was some bad news? I don't really care, to be honest. It doesn't really matter to me. The reality is I was wrong and I got stopped. Price is reclaimed to it. So this is just the range. All I then need to do is just get more bearish here and more bullish here right now. That's it. But I use this area right now that we have marked out as this 3-minute inversion. We've gone around it a lot of times, which is great. However, for me, all I really need is a closure above it, and it's telling me that order flow is higher. We also have the opening range here. And for everyone that may care about it, we have that anchored VWAP from 9:30. If you don't care about it, you don't care about it. Right now, I don't really care about it. I just want to see a minute closure above here to confirm that we go higher. No news. You know what I'm going to do? I'm going to open News Squawk and have that in my ear because it was definitely something. I don't know if you guys will be able to hear it. Probably not, because they'd probably kick off at me, but we can see. I can leave it in my ear, and if anything comes up. What time did this happen? 9:48? Yeah, I mean, he said Iran can have civil nuclear power, which the market did obviously not like. So Vance says they think there's a deal that would reintegrate Iran into the global economy. Relatively bullish, I imagine. So far, so good on negotiations. We've negotiated that Iran can have civil nuclear power. Yeah, I don't know if that's a good thing for the world. You know, last time we gave Iran nuclear power, they did some really horrible stuff with it. So, or tried to. Trump thinks that spending in NATO, something about NATO that just came up. I've got it in my ear. If you guys don't know what Squawk is, it's basically just it's, you can use, there's loads, but it's just something that tells you any news events in your ear. News Squawk, yeah, there's loads. I don't want to just shill News Squawk, but one big order came in, 600 contracts short. It's about to get wrecked, I guess. He didn't get out of it. I imagine he got out of it. I don't know. Is it order flow? Is it news? I guess the only thing it could ever be is news, right? It's order flow, because without it, the market wouldn't move. Is the order flow a direct result of news? I don't know. Maybe. Maybe. We took this low. If we get bullish closure, it would be really sad that we got wicked out and we would still be in it, right? But you have to have your stops in. You have to. So, Vance, Teals, Pete, yeah, maybe. Merit, yeah, Merit fat fingered instead of, it says 600 contracts. Merit's normal size. He might have done 6,000 by mistake. Merit, hands up. Was it you? What's the blue line? I actually don't know what this blue line is. I think it might be the VWAP from the weekly open. Yeah, it is. Do I use it? No, I just like to have them on my chart. Do I use financial juice? No. For like the news events, like to see the numbers, yeah. Sometimes if I can't be asked to find my new Squawk tab, but typically new Squawk will have it. How much do I pay for new Squawk? I think I pay like $250, maybe pounds a month for it. It's pretty expensive to be honest, but it helps. Right idea, just got absolutely squashed by JD Vance. If I was in ES, I'd probably still be in it, but I'm not because I don't trade ES. Really choppy today. Could have told you it was going to be like that, I guess. Another 30-second inversion with the PO3. Where is that 30-second inversion? Right there. You could have got in playing that 15-minute candle. You could have. You could have. I wouldn't make a habit of trading the 30-second inversions with the 15-minute PO3. You will get ran over a lot. So just be careful. It has to be done within like that fractality, right? If this buys up now above here, what do we get? Chat. Nice little test for you. We've been speaking about it for a minute. What do we get? What does it confirm for us? Do I use Squawk in my decision making and trading? Not really. I just like to know why something did something if it just absolutely starts dropping. Because if it's pretty bad, they're pretty quick with it. If it's just a standard news release, then yeah. What we would get is we would get a 4-hour, we would close below that 4-hour low, which ES is doing, right? Something to note, you're getting some sort of divergence. It confirms you hit the like button. Thanks for reminding me. We only have 600 likes. We have 1,600 of you in here, which means still 1,000 of you are sleeping. We want to see price trade above the wick so that if we are entered in the wick of these candles, this one, we can frame that we can go break even because it shouldn't return there, right? I mean, today we just seem to have got run out. It's just one of those things. Why is my entry under the FVG? I have no idea what it is. What FVG you're on about? I'm sure there's loads. $10 shock. Do we have news at 10 o'clock today? I don't think we do we? Everything is. Let's have a look at the calendar. 3 o'clock. No, we don't. Oh, wait, no, we might. Besson's testimony. So the state of internet. Oh, great. Do we just have a bunch of stuff today that's just going to ruin the day all day or what? Am I on the right day? Is Besson testifying today, Wednesday, 7th of May? Oh, that's at 2 o'clock. Why am I? I'm at 10, at 10, at 10. No, it is now. It's now. Or is it at 3? Yeah, it's now. Am I GMT or I can't make up my mind. Am I GMT or BST right now? What time zone is the UK currently? I think we're BST, aren't we? GMT or BST? We are currently BST, which means it is at 3 o'clock, which is now. Great. I love that for us. Yeah. Will I be trading during my Dubai trip? I will not. I will actually be completely offline for the whole week. So I don't know how you guys that are going to survive without me, but there'll be a special guest, I'm sure, covering me next week. Just as good looking. No, it's not Delhi. Delhi's definitely not gonna. Maybe convince Delhi. Maybe we can. How long am I going for? I'm going for a week. I'll be back the following Tuesday. So I leave on Friday. I'll be back on Friday, but I won't be back until Tuesday. Get Carl to substitute for you. No. Can you explain early May bank holiday to us? Boys, I'm so far removed from this stuff. I have no idea what that means. Why Dubai for a holiday though? The weather's nice, the food's nice, and I can just relax and not do anything. I've been a few times. I'm not, you know. Fuck. Leo spilled the tea. Leo. He's going to be covering. There you go. Shit. No, you guys are in safe hands. You're retired in Naples. Going to take a lot to call you back up. How many likes? Tell me the like goal and we'll hit it. Tell me the like goal and we will hit it. You tell me and we will hit it. Boys, I like the hot weather. Don't worry about it. I went in August last year. I can confirm it was 45 degrees, 80% humidity. I'll be all right. I'll be fine. I'm pretty sure you can't get pork at tourist spots in Dubai, but you can buy it in the supermarket. Sumo, that analogy went over my head. I'm going to blame you on the jet lag, but I'm probably just too thick to understand that. I'm sorry. Come to Rome? Cool. Cool. Delhi's sweating. He's like, I don't know how many likes. I don't know how many live viewers we need. steady, set the goal, and we'll hit it. Was Delhi a trader? No, don't think he ever traded in his entire life. Just stumbled into the stock with a futures market, and just I don't think he's ever traded his life. Can you come to Dubai with me? No. There's nothing me stopping you going to Dubai at the same time as me, but there's nothing. It's not me inviting anybody to come to Dubai with me. It's two different things. Why would I want pork? It was a question, Khan. Someone asked, "Can you order pork in a?" I'm not a massive fan of pork, so yeah. When's my limit invalidated? Well, if we push higher at 10. Would I ever trade in person at the CME? I don't think they could deal with that. We'll just leave everything virtual, right? If I'm going to the CME, it's probably only ever with Delhi, and there's no way they could deal with both of us turning up. They just couldn't. Am I going to Dubai for the tax on holiday? I don't know. I don't know if I plan to earn that much money to the point that I never return. Just live in Dubai for the tax free. It's not like you can just go to Dubai, withdraw your money, not pay tax on it, and come home. That's not how the world works, by the way. Yeah, that's just not how the world works. uh, she's still every Wednesday. She's here. What accountancy firm do I use? It doesn't really matter. You should just find your own. I'm never gonna. Listen. There's two things I'm never gonna do. Right? Well, a couple of things. I'm never gonna ask you to invest money, or I'm never gonna DM you for a copy trading service. I'm never actually ever gonna message you. Right? So that happens is a scam. One thing. Secondly, I'm never gonna talk about taxes, or what you should do with your taxes, or what you shouldn't do, or whatever. And the last thing is, I'm never ever gonna tell you what you should do with your money. Full stop. You want to do something, seek someone that is highly educated in the financial markets and take their advice. I'm just a guy with no qualifications that, through all admission myself, has got lucky or bone-eyed or pure determination to make this work, right? So that's it. Straight up, that's it. So yeah, never ever. There is a 15-minute inversion. That is sad news for me. Ideally, I would have wanted to be in this with this candle printed. Should come to Colombia. Every trader that goes to Colombia loves it. That's crazy. You can't go to Dubai on holiday and withdraw your money and not pay, because if you stay there for 3 years, it's no longer a holiday. Okay. Vietnam wants to buy a great amount of US products. Yeah. No, you need to stay in Dubai for a lot longer than 6 months to not pay tax, guys. And if you're a US resident, you can never live in Dubai and not pay tax. Well, then not never. You just have to give up your passport, which would be crazy amount. That'd be so silly. Am I long or short? I'm neither. I'm looking to get long. There you go. So basically, if you want to not pay tax on your earnings in the UK, this is just a fact. I just looked it up. If you return to the UK within 5 years of becoming a non-resident, certain income and capital gains will be realized. So you will be still liable for the tax. You have to live there for at least 5 years to pay 0%. Isn't there an entry on the 1 minute? I don't really want to get too lost in the source on the 1 minute today. But yeah, you could have got in here on this 1 minute. Where's your stop loss? The same. So at that point, your stop loss would have been 50 points. I'm a pass on that one. Anyway, we need to get to 1,000 likes, or I'm just going to stop answering questions. Come on. It's one thing we might be bored from the trading today, but we can definitely ramp up the like counter. Come on. Thanks, Khan. I said it about 2 minutes before you because there's a delay on the stream, but it's not 2 minutes. But yeah, I probably said it at the same time. But yeah. Do I use quarterly theory? You're funny. I know you. You know me. That was funny from you. Nice try. We need streamer boy merch. We need likes before we get streamer boy merch. That's what we need. Every trader's dreaming of moving to Dubai, yeah, until you go, and then it's not all it's. Who is T Trades? If I told you, I'd have to do something, and it wouldn't be very nice. To be honest, I think the Middle East is really nice. I just think Dubai itself, like the Emirati of the UAE, is not all it's cracked up to be. If I was going to live in the UAE, I probably wouldn't live in Dubai. Yeah, I mean, maybe me and Leo are the same person. Maybe. Just maybe. I'm his non-order flow. What's the word I'm looking for? Counterpart? Persona. Do I subscribe to reverse inversions local SMT? Damn. Who taught you local SMT, my boy? What's the reason that you are still using the old FEG? Because it's below the open. I want to be in this wick as if I can. I'm probably not getting filled on this, is the reality. And we're probably going higher, but I won't chase it. Diamond, you'd rather live in a cabin in the woods. See, that's a bit of me. Maybe we are made for each other, you know? As long as there's internet, maybe we are. Basically, at this point, I want to be long around the open. It's basically what I'm looking for. I don't want to be long up here. It's not the best RR. So right now, I would just look 2 frame shorts to here. But there's one thing that is for sure is 10 o'clock took 9 a.m. high. And now I'm looking for potentially lower. We'll see. 10 a.m. is just a hourly candle I like to play. Oh my God, don't play with me. Sorry, it was a bit too easy, that one. Short the VWAP? Which VWAP? Where are we putting the VWAP in for? Can't. UK is a very nice place and I'm from Manchester. Jeez. Okay, fair enough. We're We are 213 likes shy of 1K. So, what are we going to have to do? Yeah, Lorraine or Diamond is just it's just a bloke on the internet. It's fine though. If you want to live in the woods, we can live in the woods, regardless of your sex, gender, whatever you want to call it. S&T at the highs, NQ already trading into premium over 50-minute range. What do I think about potential shorts? I don't hate it. Khan moved to Dubai to cash out his crypto gains. He's going to stay there for at least 5 years. How do I focus on my time frames? Yeah, just honest to God, I'm a big fan of trading less, right? So if you trade less, what time frames are you going to want to look to trade? So if you want to trade as few times a day as possible and be in higher probability trades, be in that 4-hour candle or that 4-hour wick. So if the 4-hour opens and goes higher, at some point it should have some sort of mean reversion, especially if we don't get a closure above this area. The hard part is on ES we did get closure above. We got closure above. So this might just be an inside candle before the next 4-hour candle, which prints when at 2 o'clock, just in time for FOMC. If you're not into knife fights, nothing in the UK. I've lived in the UK for a good number of years. I've never, ever, ever seen anyone in the street with a knife. That's not saying that knife crime doesn't exist. It's just saying it doesn't exist where I live. Because it doesn't. 805. Come on, boys and girls. Get that to 1,000. Yeah, I mean, look, the taxes in the UK are a joke. However, the quality of life here is nice. In my opinion. And everything is just my opinion, right? I guess I don't live in Luton after all. I'm sure there's nice parts of Luton, but there's definitely knife crime in Luton, right? Where would you have placed your stop loss on the 15-minute version? That's the problem. At that point, I'm basically having to leave my stop loss in here and place it like here. Oh, even higher up here. So yeah, it's a bit hard. Will I trade FOMC later on? No, I'm going to do absolutely everything I don't, other than look at the chart once I close this stream. Guys, we've already established one thing, right? I don't like to talk about taxes. We can talk about why you would want to live in the UK over Dubai. That's not a problem. If you've been to Dubai for longer than a week, you'll realize it's really, really empty. It's very, very pretentious. People only care about money there. And I can tell you one thing, there's just way more to life than money. Ciao, babes. Got to run. Catch you later. Ciao, ciao. There's just, I understand that loads of people get involved, go into trading for money, but like, I couldn't live somewhere that you get judged on your financial wealth. Like, oh, it's so cringe. Listen, some of the nice people I know don't have money, and some of the most horrible people I know have money. So, and there are obviously the extremes of both, right? But I don't want to live somewhere where you are completely judged on how much money you do or don't have. There's more to life than that. Honestly, I could not care who moves to Dubai. The Queen could move to Dubai. Doesn't mean that I'm not going to go. It doesn't mean I'm going to go, sorry. I like Dubai to visit. It's a nice place to visit. You stay longer than a week, and I'm telling you now, you know for a fact that you wouldn't want to live there. It's just how it is. And the reality is most people don't go for longer than a week because they go on holiday. I've been for longer than a week to figure out if I could live there. I know I can't. Everything's perfect in Dubai. Yeah, I mean, you think that because you went on holiday there. And if you lived there and you grew up there, you're obviously going to think it's perfect because it's what you know. Two seconds. Um, Morocco, I've never been. African countries are the best. I really enjoyed Cape Town, so yeah, I can agree. Never been to Tennessee. Apologies. Never been to Morocco. Let's keep getting those likes up though. Plus 45 off of that 9:30 long, that 9 o'clock long. It was a nice long, but we got wicked out perfectly. Um, I'd be break even on it now, hence why I'm now framing shots. Um, I do like the gold. My husband's a film producer, and we deliberately don't live in LA because we want a more real life. We live in the suburbs of New York. Yeah. Listen, what have I learned in the 30 years of living? The 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 reality is I'm a big fan of the whole ethos. Let them, right? Like everything that happens for a reason. Just let life play out. I don't like to force too much. Like if something's gonna happen, it's gonna happen with or without you. So just let it play out, and I just emphasize that and to let people play out. You know, life's about experiences, right? It's not about money. It's not about possessions. It's not about any of those things. And yeah, it's nice to have. It's just I'm not going to be, naive or ignorant to say that it's nice to be able to look at things without buy things without looking at the price tag. It's definitely a nice, but it's not a must. Everyone can live a nice life without it, without money, to a point. Of course, there are people in absolute desperate poverty that their life would be changed with a fraction of the money that most people make. But all I can do is speak on my behalf. I don't speak for anyone else other than me. That's just how it is. But, you know, you will forever, ever, and ever chase the shiny object in the distance, which is becoming a millionaire or retiring your parents or doing any of these things. I would say this, right? It's all the process. It's all the process of becoming, you know. Did I find love in Miami? Um, no. It's just a fact. Yeah, health and family and friends are the most important thing in the world, which just comes back to why I don't move to Dubai. If I could pick up my entire life and move it to another part of the world, I would. I can't because everyone else lives a different life. I'm not the main character in everyone's story, although I would like to believe it sometimes. Um, so yeah, I like to travel. I like to come home. I like to have things the way I want them. Like as in my life. We all know who I love. Who do I love? I don't love anybody other than my parents and my family. My friends as well. But there's no female in my life that I can hand on heart that isn't related to me that I can sit here and say I love in that way anyway. Do I know Nutty Bar Trading? I know of him. I don't know him. Guys, this is very grindy, eh? We just took out these highs again, taking out that 4-hour low. There's no 4-hour lows, so we're just stuck, and I think we are just going to stay here. Right. One day. I love the game. Look, I'm a single successful guy. Don't hate me, you know. It's just life. I'm not going to sit here and say I'm perfect, but I enjoy the enjoyments of life. How many days do I trade inside the lab? 2. Sometimes 3, mainly 2. I'm in my 30s, yeah, voltage. What's the best thing to do when back testing? I would say like this, right? If you can back test a good amount of yearly data in less than a week, you probably didn't do it right. Good morning, Kate. Did you just misgender me on purpose? The funny thing about Patrick, right? And this is something that I'm just going to speak on very quickly. Okay, were there any girls on that boat? Or sorry, let me phrase that. Were there any girls in that photo? No, there were no girls in that photo. If he doesn't think there were females on that boat, he is dumb. But let me say one other thing. You couldn't pay me to be on the boat with the girls that he had on, though. Like, not saying that in a facetious way, but that's just not happening. Like, straight up not happening. Yeah, it's just grindy. His boat's a fishing boat. It's expensive. It's a very expensive boat, right? One, is it a nice boat to go party on? No. Two, the people on the boat weren't that nice. What do you mean, bro? They weren't that bad. Yeah, maybe. Maybe I am just spoilt in life, I guess. New Teeth Kane acting brand new? Not really. I mean, I'm just speaking my mind. Oh, I know that he's trying to suck me into that. If you believe Patrick Whelan has more money than me, then you believe that, bro. Trust me now, I do not care. If he truly believes that, he can also think that. Again, I do not care. Oh, Deli said you are emotional. I am, yeah. I don't think I'm emotional today, though. I'm just bored crapless with this price action. Thank you. Thank you, Leah. I'm emotional. Boat trip in South Africa. They didn't have many boats in South Africa, or at least like the boats that you're probably referring to. Kane for longs was the right target. Yeah, I think it was the right one. Got swept out of it again, though. I got swept out of longs yesterday as well. How am I so unbothered? About what? Depends, really. About trading. I can't force this to go where I want it to, and I can't long here with my invalidation lower. Like when I look at this right now, right, I'm asking myself, where in here do I not want to see price trade to? Well, the reality is I want to long the open. So the only place I don't really want to trade to is the low. So if I long here, my stop loss has to be under here, which even if I went for a 1-to-1 R trade, which I would never ever do, this is 100 points. This is a coin flip in my head. So I just have to wait. Do I like to party? Depends, I guess. Am I out every weekend getting partying? No. Do I like to go out and have a good time? Sure. Who doesn't? God, Bradley, you really are just putting me on the spot, eh? Are there any traders in the social space you think you should 100% avoid? I'm not going to name names, right? Because that's just a bit wild from me.
Hey, Kane.
Hey Tracy, how are you? Tracy interrupts me at the best time.
I don't I? I'm sorry. Those
It's
teeth are
okay.
looking good, though.
Appreciate that.
Yes. So all these people talking about Dubai need to start trading crude. Speaking of which, the numbers just came in, and we had crude at minus 2.032 million. That is larger than expected, so bullish. For Cushing, we had minus 7.40 million, also a bullish reading. Distillate stocks were minus 1.107 million, also bullish, and gasoline inventories plus 188 million, pretty much in line with what was expected. So overall, numbers pretty bullish for crude inventories. I don't expect a lot on this market as far as numbers are concerned, as far as price action is today, with waiting on the Fed and news of Iran out, but that's what we have.
Sweet. I think the market hates it. Oil's dropping quite a bit. Well, I'd say quite a bit. I don't know if it is or isn't, but it's definitely dropping. Same with gasoline. Yeah.
The numbers did come in a little bit less than API was yesterday, but we also have news coming over the wires right now about Iran, and the U.S. is looking to make a deal with Iran. So,
Yeah. I mean, it's definitely an oil controlled country. I am going to trade oil one day, Tracy. I promise you. I promise you that. Just not right now.
all right. Looking forward to it.
All right. Speak to you soon. I'll continue what I was saying. I'm not scared to say it. I would just say this, right? You should actively avoid looking up to traders that don't make money from trading. That's it. They're not traders. The end. Yeah. Anyway, this SMT closed back above it. But either my trading view's bugged or we gapped through it. T wasn't on the trip. T is currently in what's it called? Australia. I don't think they're all making money from YouTube. I think a lot of them just make money in other avenues. It's not necessarily YouTube or affiliate codes. I would just say this. They should just be traders first. Like, so and if they're not, then don't be a trader first, you know. The VWAP is just on my chart. I'm not actually using it for anything. I just put it up there because I don't actually know why. Powell versus Trump, who can you move the market more? I imagine if Powell come in and announced something crazy with the rate cuts, I imagine that he would move the market quite a bit more. You know? I just want to see above midnight. It's kind of where I really want to, because if I was long, I would still be waiting for midnight and this draw. Maybe not necessarily the standard deviation anymore because we did make a new low. But would I like to draw this as a standard deviation target? Probably not, because this is like all the way up here. So I don't know. Right now, I just want to see some sort of pullback to get long. So yeah. Guys, there are some very good ICT traders that make money from the markets. 100%. Yeah. How can you use standard deviation correctly? So for me, the way I use standard deviation is the market typically trends like this, right? And then reverses from a point. Yeah. I think we can all agree that market typically looks like this sometimes. So for me, the measurement of standard deviation is this area is where stops get ran before the market reverses or whatever. Yeah. You can even look like this. I don't really care about that. All I like to do is measure this stop run before it moves higher. And then I just want to see it trade into this area. Why are you saying lol, Mr. Streamer Boy? Is Tanya sassy in real life? I don't think Tanya's sassy. Well, maybe not in my eyes, but I don't know. But yeah, Tanya, I've met Tanya a few times. I wouldn't say Tanya's sassy though. Kyle, Kane, and Umar. Yeah, that was the podcast. I'm looking forward to that one coming out. It's a very good podcast. We really talked a lot. Who was on it now? So it was some British guy. I have no idea who you're on about. I've not learned from any British guy. More content on YouTube. Thanks. If we get 150 more likes, I'll put more content on YouTube. The podcast. Me, Kyle, and Umar recorded a podcast on Friday. JCap, yep. Manbeer got $4 million in payouts. That would mean he got another $1.5 million from another prop firm, which I struggle to believe. Maybe 3. Definitely not 4. Kane, YouTube shorts of winning trades. I've got to win first. It's the hardest part, isn't it? Got to be in a trade that wins. Yeah, Manbit had the record payout. Kyle beat it in the same month. He had it. But what he does have is $2 million that he didn't have. When VWAP course, bro, I've literally, this is how you use it. This is just the weekly open one. We've been below it all this time. Look at this rejection. Now we're going to reject again. And also we've got this one down here. God, it's not very nice to speak about risk that way. Imagine if he called you ugly. You'd probably take a great offense to that, regardless if it's true or not. Yeah, I don't know if he got 4 million. 4 million's a bit of a stretch. I have no idea how Manbit made that much money from trading. I'm not Manbit. It's the session VWAP, not the weekly. Oh yeah, it's the session. No, it's the 24-hour one. Yeah, sorry. That's how well I use them. You became profitable after you saw how Kyle scales his positions. Haven't watched it. Ugly is something you can't change. I wasn't calling you ugly. I just said if he called you ugly, regardless if it was true or not, you probably wouldn't like it. Regardless if you think he's overweight or not, it's still not a nice thing to say about someone. And I don't know about your mother, but my mother told me to say, if I don't have anything nice to say, I shouldn't say it at all. Guys, I'm not full-time trading. I'm not discrediting Manbeer. I think I don't know how he trades, but it's impressive. He got $2.5 million in 2 years. Bro, can you explain how you get daily bias? Wake up, press long. Do you have any brothers? I do. I have a few brothers. I have no idea. You'll have to ask T-Trades when that video is coming out. Guys, as much as I am friends with a lot of these people, I'm friends with Riz, I'm friends with T, I'm friends with Kyle, like I'm friends with, I respect all these people. I genuinely do not know how most of them trade. I just know how the T trades, and that's pretty much it because I understand T's model very well. Shorts look good from here. Yeah, this shallow sweep is nice. There's just nothing in here for me. That's the problem. Rejecting VWAP. There's a lot of absorption at the highs. There's a passive seller here now. Delta flip. I don't know. Is there any other keywords I can say? What else? Fuck. Umar is an order flow trader. He is. This was valid. We haven't come back to it for quite a while. The reality is you didn't get an opportunity to rebuy here. Could we have bought on a higher time frame? The 5 minute after this didn't ever offer us sell. Did trade out of this though. I imagine there are a lot of people long from here. All right. So for me, I would target that area. No, I'm not in shorts. I'm not in shorts. I'm not in shorts. I actually do want to see it trade higher a little bit. I just don't really like the way that this is set up right now. There's nothing really here. I need to see an impulse. I need to see that impulse before trading lower. Without the impulse, I'm just basically asking to get cooked on shorts. I need to see the impulse. I need to see the trapped longs. What? Wait, what? Wait, what? Tell me what you're waiting at. Do I use anchored VWAP? No, I put them on my chart to troll layout. That's pretty much all I do. Because you have this running joke that I'm going to sell a VWAP course. Yeah, I do watch your streams. I told you I watched the OFL streams. You think I was joking or what? The Delta flip, absorption, trapped longs. I'm learning it piece by piece. Passive seller here. All buying power is just getting absorbed. How do I measure premium discount? Everything's fractal, right? So, for example, this is one premium discount, yeah, and then within that premium discount, say price did this. Okay, we can just shorten this just to make it easier, right? There is also this premium discount. It would trade into 50%. There's also this premium discount, trade into 50%. There's also this. Does this mean that this is no longer a premium discount? No, of course not. Then it's just 50% of this. So everything's fractal. It depends on the time frame that you look for it to trade into. But overall, I like to use the fractal nature of it because that's just the way the market is, in my opinion, wired. And then yeah. What I think of Merit's trading style, I like it. I like his ability to just switch bias on a like very quick, like on a dime almost. When I watch him trade sometimes, I'm like, fuck, that's impressive. Like dead ass as well. Because like he can short a trend. I can't short a longer trend. I literally can't. That's just what here, someone could long a pullback because they see all those things or long VWAP or look to trade into that band and the VWAPs. I don't understand it and I don't want to pretend like I do, but I like the fact I have a lot of respect for somebody that can long something as it's going up. It's fucking hard to do. It's difficult. It's not easy. How would you draw premium discount on the 15-minute? Well, right now it's from this low to this high and this high to this low. Actually, no, it's from this high. Yeah. Did we trade into 50%? This is how I do it. Did we trade into 50%? No. Did we trade into 50%? No. Did we trade into 50%? Probably to the tick. I'll have to check that. But for just for ease, yes. So it's this high to this low. Yeah, we're in 50% of this range. So the thing for me now is like I would want to see it trade into 50% of this range before potentially looking for it to go lower. Higher. So here. Basically at the anchored VWAP from the low. Because like some people draw it from this high, right? But the reality is like this from this low to this high traded into 50% of this range. So coming back here isn't necessarily needed for the market to be efficiently delivered. This is just my thinking, right? It could be wrong, but it's just, yeah, that's just how it is. And then typically what I do is once we make a low, this is my logical liquidity target where I want to see price trade into before trading lower. So for this, to here, I can just move this. My logical liquidity target now is this low, right? And if we get a good reaction off of here, then I would just frame that we're trading into the highs, which overall, by the way, from this high to this low, is this high is the logical liquidity target of the entire range. So if we start to support here, my bias will be here. If we start to fall through here, my bias will most likely be this, which will be the higher time frame. How coincidental, look. Of an entire range. So everything is fractal. I'm just trying to figure out which 50% we're going to. And sometimes, yes, the market is completely efficiently delivered and there's no reason to go up or down. And that's typically when we get really big volatile moves and just taking us out of the range or out of wherever we're going. So Beston's basically just saying they're doing nothing. Yeah. Yo, Fees, how you doing, brother? What hoodie am I wearing? This is a hoodie from a brand called About Blanks in the UK. It's very thick. I actually deleted that video and I can't re-upload it because I don't have that video anymore. But what I will do is I'm planning on recording another one, probably more of a sit-down one because the driving videos are getting a bit stale. For me, at least. Funny, I've been short from 5653.75. 5653.75. Nice. I don't know. I'm not a gold or a platinum trader. The way that I trade markets tells me that it should work in all markets. Yeah. Creating that 50% swing now. So if we are going to buy up, we buy up from here. We have 9 minutes left on this candle. So we hit this. Now, for me, what I would look for, good reaction off of it. Everyone that was long, like I said, from here, then yeah. We also have that anchored VWAP from the low. We just need the delta flip, the absorption, and God knows what else. Right? I'm kidding. But now all I really want to see is, for me, is some sort of aggressive move up or lower, ideally lower, right? Aggressive spike, stall, and then an aggressive move, pull back, and then we can trade it into the high. Or at least 50% of this as well. You know, that's basically where we get break even. So all I'm trying to do is just stay on the right side of the 50%. Bro just pretended taking shorts. I'm not in a short. I'm straight up not in a short. There's no way I could get in a short up here. The only thing that was up here was this 3 minute, I think. Was it 3 minute? No, it was the 1 minute. But like, this is like insane for me to take. I couldn't take it here before this because, yeah. Yeah, I mean, it's a nice cover area for me. It's also coming off the open. And we're at that 3 minute now. So we could just take our original trade that we were looking for all along. And now we have a nice target above. Right? Surprised I didn't short. I'm very risk off today, right? Like, the money inside this account right now is, I purposefully sent less money to this account than normal, right? So I can't go full size on this. Literally don't have the margin available to do it. So now realistically, I just let this play out. And then if we get some sort of pullback area that I can look to get long off, then I'll get long off of it. Do I want a long? Not massively, but if we are to play the 50% area, we should see some sort of bounce here up, maybe into this area. I can get risk off, and if the market decides it wants to explode higher, we can. But am I going to look to short here? No, I wanted to short here. We didn't get that impulse that I spoke about. I wanted that impulse higher. Without the impulse, I can't trade it. Getting the impulse lower, I like to trade these V shapes if they happen. Google's just free falling. Oh, it's Alphabet, isn't it? No, it's just Goog. Oh, what happened here? Did someone do something that was pretty bad? Uh-oh. We are at value area low. Yeah, I haven't discovered that part of order flow yet. So speaking a different language to me, brother. Before the year's out, I'm going to be able to talk through everything order flow. And it's going to be completely down to the order flow labs, guys. I haven't had the time to fully dedicate to it. But when I do, just know it's over. It's over for everyone. Look at this 1031 candle. Failed to break above the initial balance. Crazy. And now we're breaking below the initial balance. Crazy. What do I know about initial balance? Nothing. Zero. Straight flush. Happens. Where do we flush from? The high resting in discount of the range. Just had no entry for me. Nice algorithmic delivery here. Sure. If that makes you sleep at night, I bet it would. I'm sure. Oh, does anyone know why Google died? I can tell you why Google is pulling back. Does anyone know? It's actually got nothing to do with Google, believe it or not. Apple announced, VP of Services says Apple is exploring adding AI to their search browser. Says searches in browsers fell for the first time in April, which is obviously bearish for Google. It's nothing. Sorry, Vin. Sorry. I am being serious a lot of the time. I'm gonna be honest. Like, I'm not. You're right. I don't know when I'm being serious either. I can't really think about when I've been serious to stream. I've been serious a few times, but like I have been a bit light-hearted sarcasm. It's just British humor, or the lack of humor, I guess. Apple gonna invent it in 2028. Invent it, implement it, invent. No one uses Google anymore. Okay, so the segment here will probably come to an end soon, right? But what I will say is, if this pushes up, takes the low, and then reclaims, I would naturally look to long that back to 50% of this range. So,
Kane,
yeah. How are you?
I'm sneaking up on you. I'm pretty good, man. How are you doing?
Good. Missed the long and then missed the short, so overall pretty bad. But yeah, it's not the most horrific day. Risk off day for me, Jim, because of the Fed. So yeah, not really doing much.
Yeah, it's very sloppy. You know, I loved it when you said going long when the market's rallying is the effing.
It's,
I'll
it's
use
the
I'll use
hardest thing.
effing.
Yeah, it's
Hardest thing to
hard.
do, right? Yeah, I agree with you, man. I thought it was just me, but I'm glad you said it.
Yeah, no, look, I really respect everything the order flow guys do, and everyone that trades it, because for me, naturally, I like to get in on a confirmation for a trade. And when these
Yeah.
guys just see order flow kick in and they just jump on the train and it starts to run, it's something that I'm trying to look towards. So yeah.
Yeah.
But yeah, tough day,
Yeah.
but yeah.
Yeah. Stowe is the champion of that.
Yeah, he'll be mid conversation and just slam a trade. I've not got to that level yet, you know. I actually have to think about the things I'm saying. So
So, hey, Jason, I'm sorry, Kane, have you met Jason Shapiro?
I
Crowded
have
Market
not.
Report?
Jason, nice to meet you.
Hi, how are you, man?
Yeah, I'm good, thank you. What about
Good.
yourself?
Yeah, hanging in there.
Yeah.
Yeah.
So, boys, what do we think the Fed's going to do today? I have a very out there opinion, so I'm intrigued to think about what everyone else is going to do. Everyone else is thinking.
No cut, man. I heard you earlier say you think there might be a surprise one. If that happens, I will buy you dinner at a nice restaurant.
The most entertaining outcome is the most likely in my head. The most entertaining is surprise rate cut. Just get everyone bearish, send the day down now, and then just boom. I don't know.
So we're going to be talking a little bit. So Jason's an expert at a lot of things, but the Commitment to Traders report by the CFTC, and which I've been a fan at for a long time, is that ever on your radar screen, Kane?
No. So the one thing that my co-founder looks at is he looks at like the seasonality report, which is it does take on some data from COT. So he pays attention to it. He's heavy on that. And then, yeah, basically from a seasonality perspective, typically bearish bias, like bullish bias based on the COT data. But personally, I don't look at it. I don't know anything about it. I actually, when I had to shoot to my dentist appointment, I actually listened to the stream with Jason last week and going over it. But still, a lot of it went over my head because I just don't know enough about it.
Yeah, well, I have my charts amped up now. I wasn't prepared last week, but I'm prepared this week, and we're going to cover some markets and talk about it. So appreciate you being here, Kane. It was an awesome day. I know you're back from F1. One last thing on that. You nailed it when you said Max Verstappen is so good, doing as well as he did, driving I don't want to say shitty car, but a car that's not as good as the other ones.
I mean, it's definitely a shitty car compared to the car they had for the last 2 seasons, right? Or the other cars are just so much closer to their good car, but they haven't evolved like everyone else. So yeah, phenomenal drive from him. But Oscar and Lando are just miles ahead right now. Yeah, they're great. They're great. So
All right.
appreciate
Well,
you
thanks
guys.
again. Yep, I appreciate you. And we're going to get into the crowded market report with Jason Shapiro is in the house. How you doing, Jason?
I'm good, man. Thank you.
All right, you're looking pretty good for this FOMC Wednesday. So let's talk about. So I've this kind of tell everybody what I have on my charts here. I tried to mirror what you showed last time, and with the help of Mike Burke behind the scenes, we added the commitment of traders data on a weekly chart. On the lower panel, and there's three different kinds of histogram bars, right? We have the commercial net positions, we have the large speculator net positions, and we have the non-reporting net positions. And so maybe you could walk us through what each one of those categories means.
So in general, the commercial traders are ones who it just comes down to when you fill out a futures account opening form, you can classify yourself as a commercial trader. And if you are a commercial trader, you are subject to less margin. So it's a benefit to be able to do that. But you have to prove that you actually are a commercial trader. So a commercial trader is someone like, a farmer who has the wheat. So they're trading wheat to hedge their wheat position, right? That's a commercial trader, right? And everybody else is a non-commercial trader. And that breaks down into the blue, which is large, and the yellow, which is small, which just means there's levels with each market where you have to report your position. The CFTC does that so that they can try and stop people from trying to corner the market. So if you get over a certain amount of open contracts, then you have to report that to them. And that's the blue people and the blue histogram. And then everyone else, is yellow. Anyone who doesn't have to report and is not a commercial trader is the yellow. So you've got sort of commercials, large trader, and small trader, or as they call them, reportable and non-reportable.
Yeah, that makes sense. The last I checked for corn, the threshold for reporting was 250 contract, an open position at 250, either short or long. I don't know if that's still the actual number, but each market I think varies, right? Depending on the market and how big your position needs to be before you report.
That's right.
Yeah. So, and for folks that didn't see us last week, let's just talk a little bit about why is this important? I mean, I know why it's important for me, but just from an overall big picture point of view, why is this data important?
So for me, what moves markets clearly is money going in or money coming out, right? So if we're looking at positioning, where it's important for me, people use this in different ways. Okay. I use it because I am sort of a market turn picker. I pick sort of medium and longer term turning points in the market. And what helps a lot with that is determining where there is massive positioning. So if speculators are massively short something, I don't know that it necessarily forecasts that means the market is going to turn around. But what it does do is help determine the risk reward on the trade, which is if the market does turn around and starts to move up and everybody's caught short, then there can be a very big move the other way as all those shorts get squeezed, right? That's what it does for me. Like I say, I don't know that it necessarily does any great job of predicting. I don't consider it to be a great predictor, but it is a great risk manager, and it is a great way to determine risk reward, right?
Yeah.
Which is really, in my view, what trading is, right? We can sit here and guess whether a market's going up or down all day long. But to me, the game is, if it's going to go up, we want to catch something that's going to go up, 5x what
Yeah.
it could possibly go down. And obviously, a market where people are super short has a good chance to do that.
Yeah. So when you sell something, if you're short, then as soon as you do that, the second you do that, you become a buyer at some point in the future, right? You need to offset that position, unless you're going to take delivery. But let's just set that aside for a second. You're a
Right.
buyer. You become a buyer. So there's at a certain point when the market moves down, there's going to be a point where the shorts are going to get long, no matter whether they're hedging or otherwise, right?
You would think, yes, at some point, sellers have to buy and buyers have to sell for that matter. But yes,
Yeah.
but
All
it's
right.
more
Well,
about, to me, like most of the large traders, for example, are going to be the CTAs. And most of the CTAs are going to be trend followers, right? So if their trend's going down, 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 they're getting short, 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 and they get to like this maximum level of shorts. Um, Again, I don't know that that means the market's going to turn, but if the market does turn, then what do the trend followers do? Well, they have their stop loss levels at all the various, depending what kind of trend follower they are, all the various moving averages or whatever it is that they use to get out of those trades, right? So should the market turn, they start getting stopped out, right? Stop, 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 stop all the way. And the issue is when the market has so many shorts out there, and they all start to cover those shorts, you can get a pretty big squeeze higher. I always there's a number of things where I can point to, but one that I think most people can relate to was that GameStop situation, right? Which isn't a futures contract, was a stock, but it was the same thing. You had massive amounts of short interest in that stock.
yeah.
It started to move higher, and those people that were massively short were forced to cover. And they had so many shorts on that there was no one to cover to, right? Which is why the
Yeah.
stock went up, 10 times or 20 times or whatever it was, right? They just got squeezed. Um, so that's kind of how I see it, and it's not like the GameStop fundamentals changed during that period. They didn't. The company was just as crap as it was before. It was simply a positioning thing. People had gotten way too short. And the reason they got way too short was they knew that on a fundamental basis, the company was crap and was probably going out of business. So they got massively short. And look what happened. They got squeezed to the point where they had no choice but to get out because they were getting bankrupt. That's an extreme example.
Yeah.
But to the point of what moves markets, which at the end of the day is just the buying and selling, right?
Yeah. Well, let's take a look at some markets now. We'll start with the E-mini S&P, and then we'll move to whichever market you think is an interesting one to talk about. I want to start with the E-mini S&P because we have a lot of folks that trade it right now. And let me just pull it up here. So yeah, what are you seeing in this chart?
So it's just a neutral level, you know what I mean? Um, can you go back in time and do a little bit longer period on that, or
Yeah, I can. Let's see. I don't know how far back, but we'll try.
right? But you can see there, right? It's very neutral relative to that history, right?
So when you say neutral, the size of the histogram bars, right, which is the measure of net shorts or net longs,
Right.
is there's nothing really extreme. As an example, like we could take this week and then go back to March of what is this? This is March where
So if
we
you
have
look at
a
March, right, there you have
yeah,
the commercial super short, right? And you have
yeah.
the speculators pretty darn long, right? So that would indicate to me that the risk reward would be to start looking to get short the S&P. Now, if you shorted the S&P starting the second week of March, I think you did pretty okay, right?
Yeah.
So that
Okay.
helps, you know what I mean? And because people were way too long, the market started to go down. This doesn't tell you, hey, there's going to be some bad news on the trade front or whatever, or Donald Trump's going to
Mhm.
tweet or whatever. What it tells you is if something like that happens, there can be a very big move down as these longs have to start getting out. And that's kind of exactly what happened.
So it establishes a bias.
Positioning bias, correct. It
Yeah.
establishes to me like I say, a good risk reward opportunity.
Okay. And so what about trends? Like for the last, and this is kind of subtle and we'll move to another market, but you see, the large specs, trending down a little bit. You see the commercials trending up a little bit the last three reports. Do you look at the trend itself or you just look for extreme
No,
histogram bars?
I'm looking for me personally, like I say, people use this stuff in different ways. I personally look for extremes because I'm trading market turns and I find that at market turns positioning is as extremes a lot.
Okay.
For
So
my
even the
process,
S&P,
that's what I'm doing.
got it. All right. Even the S&P in the middle right now, nothing to write home about. What are some other markets that you think might be interesting to look at?
Oh, you can look at the yen.
All right. Sometimes the yen is a little funky on my computer, but we're going to try it anyway. See if we get lucky here. It's the gerbils are running around now trying to get the data to populate the bottom panel of the chart. There we go.
So
Holy
you see
cats, look at
there,
that.
the speculators, the blue and the yellow, start to get very long a few weeks ago, right?
Yeah.
Again, does
Yeah.
that mean that the yen has to go down? No, but it means the risk reward is now skewed towards the other way, right? So you talk about trend. For example, if you're a trend follower and you're in long yen, I would be looking to either get out of that position or to reduce my longs in that position because the risk return skew has clearly changed at this point when everybody's long. Would you rather be a market that nobody's long, or would you rather be long a market that everybody's long? Right? It's pretty much that simple. From a risk reward standpoint, I would argue it's much better to be long a market that nobody's long because they still are yet to get long. Whereas if they're already long as hell, right, then that changes the risk reward, right? So in this particular case with the yen, the risk reward was changed there in my view. Does it mean the yen can't go up? No, right? It just means the risk reward is not very good anymore, right? So that's really the most crowded trade there is right now. Now, if you want to just short it, that's a different story. But certainly as a trend follower, I would be looking to reduce my yen exposure based on this.
Okay, so no, I'm thinking about this in my head, and I'm saying, all right, there's so many long positions now for the specs that it's going to be harder to push up price any further, and then they're going to become sellers at some point. So it's a bad time to go long. Maybe not a great time to go short yet, but it's a bad time to go long.
Or maybe a great time to go short. It depends on how you want to play, you know? If you're a trend follower, you're not going to be shorting. If you're a counter trend person like me, you will be shorting, or at least looking to short. Um, yeah, in that situation.
Okay, I got it. It's hard, when you see these bigger histogram bars materialize, there's also a timing issue too, right? At what point do you time your entries and exits?
Yeah, so that's sort of level two, right? You're not going to, for example, just take a short on the yen, or on anything, just because the commitments of trader is showing this. Um, what I personally do, as I would advise anybody to do, no matter how they're trading, is I wait for the market to sort of confirm the fact. So if I'm looking to get short yen, I'm looking for the market to confirm that short is the trade. And again, some people use things like, oh, it went through the moving average, or it did this, or it did that. I personally use what I call news failure, which is the yen's been going up. There's a news flow and a narrative that is pushing that move up. I look for something that confirms that narrative, such as, okay, the Bank of Japan is getting hawkish and they're going to raise rates, right? So if the Bank of Japan were to come out and raise rates, one would think that would continue to push the yen up. If the yen failed on that and actually closed down that day, that's the market confirming to me that it's done. There's nobody left to buy it. They all bought, it's a classic buy the new, buy the rumor, sell the fact thing, right? So the fact comes out, the market fails on that, and there it is. Why did it fail on that? Because everybody's already long. There's nobody left to get long. So now it goes the other way. And I think you'll find over time, if you watch, markets top on good news and they bottom on bad news, right? Almost always, right? It's not like if a market's going up, 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 then bad news comes out, and then it just goes down, 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 down. You know, if it were that easy, then we could just trade the news flow every day, and this would be a pretty easy game. But it's not that easy. So markets will most of the time top on this good news and bottom on bad news. So we get some good news on the yen, the market fails on that. That's where I would go short, and I would short it against that good news day, right? So the thought process is kind of like, okay, the yen's been going up for a long time here. Everybody's long. Okay. The good news comes out and somebody buys yen there. Well, that person should never make money because trading is never that easy, right? You're not going to wait. Things been going up for 6 months. The good news comes out and now you buy it. You know, it's just, that's usually a losing trade. So I will short that. And if it does go through that high, then I'll get stopped out, right? So clearly the trend is very strong and I'll get stopped out. So I'm risking essentially that 1 day worth of volatility. Whereas if I catch it and that ends up being the high, then, you know, I'll make 5 or 6 or sometimes more times that amount. And that's what I'm trying to do over time. Make 5, lose 1, lose 1, make 5, lose 1, lose 1, right? Make 35% of the time. If I can make 5 and lose 1, you know, the other 65% of the time, over time, I build a nice return stream.
Yeah. So in your example, you know, the Bank of Japan's, you know, monetary policy actions were not strong enough to convince the market convince the market, and as a result, the opposite happens. I don't know how many times I've been fooled by news, right? The news comes out, you think it's good, you think it's bullish in whatever market you're looking at, and the market reacts the opposite, and you scratch your head and say, wait a second, that shouldn't happen that way, but it happens all the time that way.
It does, because the market is a discounting mechanism, you know what I mean? And this is trying exactly my execution part of it that I talked about, is trying to take advantage of exactly that point, right?
Yeah.
We all have gotten burned in that. So why not instead of getting burned in that, let's take advantage of it and go the other way with it, right? And let's go the other way with it when the positioning is so crowded, right? That there could be a very good move the other way.
Yeah, that makes sense. All right, let's move on to another market. We have a ton of time. We could take a look at some more markets. Any other market on your radar screen?
Wheat.
All right, let's see. I do have the July wheat up here. Let's pop this guy up. Let the data accumulate here. It'll take a second. Gerbils in the machine are running around. There we go. All right, what are we looking at here?
So you can see, did it come up?
Yeah, I got it up. You should see it.
Yeah, so you can see here, commercial is very long, the red, right? And speculator is very short. So I have not yet, but am looking for something to get me long wheat here. So, for example, there's a WASDE report, which is the big monthly grain report that comes out next week.
Yep.
So if that could come out super bearish, and hopefully wheat goes down on that, and then rebounds and closes the day up on the day, with no other kind of news flow, then I would get long wheat there against the low of that day.
Okay, so and that would be the WASDE report. We do have Sterling Smith that pops on every once in a while and walks us through the WASDE report. So that would be akin to a news event like the Bank of Japan for the U.S. grain market.
Correct.
Yeah. All right.
So let's get some super bearish news on wheat, and let's have it not go down. And let's say, well, we know why that is, because everybody is already short. They've already discounted in the fact that they know whatever the WASDE report is going to report, right? There are people paying attention. You know what I mean? You've got farmers out there, you've got grain analysts out there, you've got everybody out there. And by the way, your farmers, so to speak, are super long right here, right? Which is what the commercials is telling us, right? So what does that tell you? You know?
Yeah.
So let's see, you know, the report might come out bullish and the market might just go up. And if that happens, well, then I just miss it, right? I have a very specific process that I do, and I stick to it. But again, if I were short wheat here on a trend following thing, I would be reducing that position, to say the least. Because again, like I said, the news could just come out surprise bullish for some reason, right? And then it's not going to give you the chance to make my trade, right? But you'll at least be less exposed to it if you were taking profits along the way here as a trend follower.
So in this example, then you want that the news to come out, and then you do want the market to go down, and then you get in, or how do you handle that?
That's the best case scenario, is if the news comes out bearish and the market kind of pukes on it, and then closes up on the day, and then that's where I'll get in, sort of on the close. That's the market confirmation. And then I know where my stop is, which is the low of that day. I know how much I want to risk on the trade. So I know how to size my position, because here's my entry, here's my stop, here's how much I want to risk. So I can put on this many, contracts. And if it goes back through that low and I get stopped, okay, it's another losing trade. And if I get it right, then hopefully, like I say, I'll make 5 times that.
Yeah. All right. Yeah. I mean, wheat's a great market to trade. Great. These are the original futures markets developed in sometime yesteryear. But what other markets do you think we could take a peek at here?
I think there's something interesting in Bitcoin. I don't know. Do you have Bitcoin that you can do?
Yeah, I don't know if I have Bitcoin CO because I cannot do Bitcoin right now. I'll have that prep for us next time.
Okay. I mean, what I can
But
just tell you off the bat is that
yeah,
Bitcoin has been interesting. It's a newer COT market.
yeah.
So it's interesting to see the behavior as it goes. But what we have seen a few times in the last couple of years is that Bitcoin has come off. And then as it rallied back, people sold into the rally. And that's what's happened this time too. They were sort of long Bitcoin, I'd say, into this recent low. But they have sold the last 3 weeks as Bitcoin has rebounded and outperformed other risk assets. They've sold into that. And in the past, what we have seen over the last few years is those have offered some really good opportunities. The same thing happened before the big rip post-election. About a month before the election, Bitcoin started to go up. The speculators were selling into that. And then it did that big rip. And of course, they had to cover their shorts that happened. And once they covered their shorts and it all went neutral, Bitcoin went nowhere again, right? Well, it went from 108 to whatever it was, 84 at the lows and all that. And now on this move back up, they're doing the same thing. Does it work every single time? Probably not. But it's interesting to note they're doing the same thing here. They're selling into this rally.
Okay, yeah, I have my charts loaded with the micro Bitcoin. I don't think there's COT data on that. I think you got to go to the big contract to see the COT data, as my memory serves me correct.
There is micro, but it's not as much and not as, I think, powerful as the bigger Bitcoin contract. Yeah.
Yeah, no, I got it. I just kind of toggled to a daily candle just to catch up with the conversation. That's
Right.
all.
It's okay. I
So,
think gold is probably something that a lot of people are interested in. We can talk about that one too.
hang on, let me get there we go. Yeah, gold is on the move, man. I mean, we're talking all-time high close, maybe.
Can you go? Yeah. So if you look at that, right,
Yeah,
what's been interesting here is the opposite effect, right? Which is that as gold, if you look at it all the way going back, a few months, right? I'm
yeah,
trying to look at the chart here, but yeah, if you look at like the February area, right, they were
yeah,
getting a little extended long on those blue line, right? But
yeah.
ever since then, they've been selling it. Now, why they're selling into this rally, I don't know, right? You would think trend followers and whatnot would be buying more,
Yeah.
but the fact is they're not. So I'm not going to question. So what this tells you is I don't need to get out of my long gold. I am not looking to get short gold, right? This gives the trend more power to continue because they're getting out of their longs as the market's going up, which means that they can get more long, right? At some point, they're going to have to chase it higher, right? Like if you're a trend follower and you're not long gold, I don't know what kind of trend follower you are. Things on all-time forever life of contract highs. Like what trend is it that you're looking at? I don't know. But the bottom line is this has kept me, for example, as a turn picker from shorting gold. I'm not long it because I'm not a trend follower. If I were a trend follower, I would be happy about this because I'd be able to sit on my trend position. But it's helped me to not short it at least. And a lot of this positioning stuff and showing up in the COT is about that. It keeps me out of trouble, you know. People call me the contrarian because I'm trying to fade things, right? But fading price is not a great idea, right? I always say there's a fine line between contrarian and just plain stupid, right? And I've been on the just plain stupid side plenty of times in my life, right? Especially earlier in my career when I wasn't using the COT, I was trying to fade things like that, and it didn't work, you know? And COT helped me to find a much better way to try and fade these price moves. And as I'm talking about with gold, not fade these price moves, which is just as important, you know. Being short gold for the last couple months would have been a painful experience, right? And this has kept me from doing that. So again, helps with that as well. Sometimes the not trade is just as important as the trade.
It might be more important. I mean, I'm with you on that. I don't know how many times I've, made mistakes that, as soon as I make them, I know, I know, through my head goes, Jim, you know better. What are you doing?
Yeah, I know. I mean, this again, this helps me. That's what this helps me do. It helps me from being too stupid, which I need because I am kind of stupid. But
No,
th
you're not.
th th this helps me. I'm just looking at some of the questions. I wish COT was daily. That's true. We all wish that COT was daily. We have me, my friends, and now a lot of the people that are on our Discord. We send emails to the CFTC quite a bit, and there's no reason
Yeah.
why we couldn't make it daily. All right.
Well, the other thing, right? The positioning. If you have this, if you meet the threshold, 250 in corn, 1,000 in the E-mini S&P. If you meet that threshold, you have to report every day, and then the FCM monitors that to make sure you do. And that data in this day and age should be available. If you go to this, that website, the COT website, it looks like that report's printed on with Courier font on a 1956 typewriter.
It's a joke. The CFTC is I believe, the least funded department in the entire U.S. government. Um, Feel free to hit them up and send them emails. I would
Yeah,
say what I have done um, was I had a quant years ago develop an algorithm to try and capture the daily COT, right? We're just looking at daily. We do have daily changes in open interest, right?
yeah,
So we're looking at the daily changes in open interest, how that relates to the price that day, and we are sort of interpolating a daily COT, which doesn't have 100% accuracy, but it's pretty close and obviously adjusts when the new data comes. And then we learn that much more each week. The algorithm learns each week, okay, we could have adjusted this way and been a little closer, and slowly
yeah,
over time, hopefully we get there. I guess the good news is, at least from my trading perspective, it doesn't make that much of a difference because I'm not day trading this stuff. I'm not actively
yeah,
trading this stuff. I'm picking the one turning moment. So
yeah,
if they're sort of very short, but not at max short, but in the
yeah,
meantime, since the data came out a week ago, the market's gone down a hell of a lot more, than the
yeah,
daily algo will probably get me to where they are max short. And then there needs to be a news failure anyway, right?
yeah.
So it's not that big a deal, but I do the daily algo to try and offset that.
Yeah. So Michael asks, Michael Melo, hey, how you doing, buddy? Oh, the Lieb is here too. Good to see you, the Lieb. Um, yes, you could chart the Community Traders data natively on the NinjaTrader desktop. If you want the fancy crowded market report version that I have, just send an email to learn@ninjatrader.com, and we'll guide you to the right path there. So thank you for that, Michael. Good to see you as well. All right, so we got about less than a minute left though. Any parting words? Any last? And we're going to see you again next week, so we'll be able to cover more markets. I know we did a lot of education this time, but any last thoughts?
Not necessarily on COT. I just want to say real quick that because I know a lot of people here are day traders and S&P day traders, and I was watching the day trading thing uh, before I came on.
Yeah.
I do not day trade anymore. I did for a while, for years. We do have people on our Discord that day trade. I don't because, quite frankly, I kind of manage too much money, and to move that around so quick and all that uh, is not really viable for what I'm doing. I'm also too old for that shit now. My heart will explode if I woke up every morning and tried to day trade. However, um, I think the most important aspect of day trading the stock market, the US stock market, and this has been proven by a lot of the guys on our Discord as well who use this. And today you can look at it. If you are looking to be long on a day trade, let it be confirmed by the NASDAQ leading the market to the long side. Okay? And you look at today. If you are looking to be short, let it be confirmed by the NASDAQ leading to the downside. And that's exactly what happened all morning this morning. Even as the market was rebounding this morning, the NASDAQ was the weakest index of all of them, right? And when that's the case, this is the most volatile index. So it's the higher beta index. This should be leading the market. And I will tell you, not every day, but over 80%, I would bet, and maybe even more, right? This is the greatest indicator that I know of for day trading, right? At the very least, the fact that the NASDAQ was lagging this morning would have kept you out of trying to get long, right? If you wanted to trade from the short side, it would have confirmed to you, okay, I can try and trade from the short side. But I think that's the single most important thing. Not a lot of people look at that, and not a lot of people pay attention to that. I day traded this stuff for 20 years, and I can tell you,
Jason,
to me, it's the single most important thing you can watch.
yeah.
So I
Jason,
would watch that.
yeah, that's a great observation. Great advice, Jason. Appreciate you spending this time with us. Looking forward to next Wednesday. We'll cover some more markets again. In the meantime, Crowded Market Report. They could find you on X that way.
Crowdedmarketreport.com. They can find that's our webpage. I am on X. It's like crowded underscore MKT underscore RPT, if I'm not mistaken. But the best place to really learn more about us is on crowdedmarketreport.com.
There you go. All right. There it is from Jason Shapiro. Appreciate you. Have a great week. Coming up next, right now, we're not even going to pause. We have one of my favorite guys from NinjaTrader Live 1.0. Brannigan Barrett is with us from TradeLow. Brannigan, how are you, man?
Hey Jim, yeah, good. Thanks to yourself. Thank you for the opportunity today.
Oh no, no. We should be thanking you for the good info you're gonna provide for us. I mean, I know that you have a lot of opinions and a lot of analysis, and FOMC day is the perfect day to have you with me today. I have a ton of questions, but what do you think's gonna happen today?
It depends. I think the best way to frame today is the Fed is caught between a rock and a hard place. There's no easy decision for them, and hopefully, once we go through it today in a little bit more detail, the traders will start to understand the position that the Fed finds himself in, which is a very, very difficult situation. They have to choose now between trying to safeguard against an aggressive slowdown. At the same time, they also have to make sure they can look after the other side of the mandate, which is keeping those inflation expectations contained. And I think, unfortunately, what they have is a situation now where the hard data is holding up relatively well, whereas the soft data is suggesting we're starting to see a reacceleration of inflation. So they are caught in a very, very difficult position now where they cannot cut. They're not going to have that runway to cut anytime soon. And, I think if you're going to ask me what do I think is a potential setup for today, is the situation where the Fed pushes back on this idea that we get rate cuts this year. Now, the audience might not be aware, but the market thinks we get 3 cuts this year. I mean, Goldman Sachs came out just this morning saying July, September, December. The reality is the Fed's not going to be in that position to cut unless, of course, the labor market suddenly chokes. And we're not seeing that in the hard data right now. Now, sure, these Goldman Sachses and all that, they've got a lot more data on hand. They obviously spend billions in getting this data, so they are well aware of the situation on the ground. But until the hard data really chokes off, the Fed's not going to be in a position to cut. And so, yeah, I think the key play today is this idea that the Fed actually pushes back on rate cuts this year. And I think that is a potential play I'll be looking at.
Well, yeah, that does kind of put him between a rock and a hard place because the next meeting's not until, 6 weeks later, and you're going to have a bunch of data coming in that might be more relevant to the recent tariff situation.
I think
So
that's
do you
one of
try
the.
to, yeah,
Yeah,
go
go
ahead,
on,
go
go on.
ahead.
Sir. No, I was gonna say
No, I
that's
mean,
one of the.
do they try to front run that, or do they just, no, you never want to be called, you're too late, too late, pal. I mean, come on. But that's kind of the place he's at.
Well, look, I think we'll address that as the sort of this idea that Powell has two options here, and I think this is, one of the tips of advice I give to younger traders when it comes to any central bank is you have to be nimble. I think the sort of what we typically want to do as a trader is we impose ourselves. We say, oh, the economy's slowing down. He should cut immediately. Well, that's not good as a trader. As a trader, we need to see it from the standpoint of if he cuts, what do we do? If he hikes, what do we do? If he's hawkish, if he's dovish, what's the scenario set? And so you rarely have to lose those sort of deep beliefs you have about what he should do and rather focus on what he does actually do. But what I was going to say is I think the chairman has got two choices here, and I think this is kind of how I think it's going to play out ultimately. The chairman has to choose now between does he come in and does he ultimately stand put, which is, I suspect, the base case. He's going to do absolutely nothing today and perhaps into the future. And he's going to allow for time to ultimately determine what the implications are of tariffs, what the implications are of with the economy slowing. Okay, what they're looking for ultimately is they need to be very confident that there's a little bit of demand destruction taking place as a result of the uncertainty from tariffs. Now, no one knows for sure whether or not there will be demand destruction from these tariffs. And the problem is, if they are going to impose some degree of tariffs, we are definitely going to get some degree of inflation. Now, if the economy doesn't slow down, if it just moves towards 1% this year or something like that, the reality is you can still be in a situation where the economy is good enough with inflation running at 4%, 4.5%. Now, in that environment, the Fed has got absolutely no ability to cut interest rates. And so one option Powell has got now, and I suspect this is option number one, is to just allow for time to pass, allow for more data to come through, because don't forget, the Fed still thinks they've got 5 cuts. They still think they can cut 5 times before they get to neutral. So they believe their policy stance is still very, very restrictive. Okay, now that matters because when you, as the chairman, say, look, we'll just allow time because we can see more data. If suddenly we got a bad hard data point, so let's say the non-farms comes out 40,000 against an expectation of 150. At that point, Chairman Powell doesn't have to wait for the next Fed meeting. Okay, Chairman Powell can come out immediately into meeting and say, look, we need to get ahead of this. We need to cut 25. We need to cut 50. Okay, they did this in September last year. They immediately responded to one single bad data point and they went very, very aggressively. Okay, and that's because they still believe they've got a restrictive stance and they'll let the data decide ultimately when they're going to begin that process of moving back down towards where they think that neutral rate is. Now, that's option one, which is allow time to pass. Option two is this idea of what Trump wants Powell to do, which is you should be cutting. The economy is slowing. Inflation is at 2.6 PCE. That's what Trump wants him to do. The problem he has there is Powell genuinely does want to cut. I can tell you right now, every Fed member wants to cut. They would desperately love to be cutting, but they can't cut at a time when inflation is starting to reaccelerate. Now, if he was to cut, and this is the key, if Chairman Powell came out dovish today, or they cut interest rates prematurely, before that inflation is back, in the bottle, what you'll see ultimately is you'll see a repeat of what we had in September last year, except it will be on sort of steroids. Okay, well now if you cast your minds back, and I've got a chart of this, I'm actually gonna, maybe we can bring that up. I think that's probably not a bad idea. I'm just gonna zoom across to that chart. So if you go across to September last year, okay, this is ultimately the 10-year chart and 10-year yields. Okay, now most of your listeners are well aware of the sensitivity of bonds this year. Most of your listeners are aware of the fact that we have a lot of talk of foreign central banks or foreign pension funds effectively offloading, some US bonds. So there's a high degree of uncertainty around the bond market right now, and in particular, there's a lot of volatility in the bonds, which is problematic. Okay, this is the biggest, sort of bond market in the world. Now, if you go to September last year in particular, that's that point there. Now, that low tick in September last year, this is a weekly chart. That low tick was made the moment the Fed cut 50 basis points. Okay, and we accelerated, just to put this into perspective, we went from 360 yield up to 5%, 140 basis points into the end of the year and the start of this year. Okay, why was that? Well, because the Fed came out, they were dovish at a time when inflation was not yet back at target. And what did investors say? They said, well, hang on a sec. If you're not going to focus on inflation, if you're going to allow above target inflation, well, term premium needs to rise. And that's what we saw there. We saw a significant rally in those bonds in terms of yields just after they cut 50. Now, why this matters so significantly is because if the Fed was to try and come out dovish this time, not only will you see a repeat of September, you'll see the curve massively steepen, you'll see long bonds get hit very aggressively, but keep in mind, contextually, this year, the vol in terms of the bond space is significantly different to what it was in September of last year. In other words, you will see yields of 200 basis points higher. You'll see us well above this 5% yield on the 10-year if they were to cut prematurely. Now, when you look at risks, and this is key to understand, Chairman Powell knows this. He's not unaware of this because he knows what happened in September last year. He has to choose now. If he was to come out and cut prematurely, like Trump wants him to do, the reality is bond yields will shoot above 5% and the US economy will go smashing into a recession. Okay, that's all but guaranteed. You put 10-year above 5% and it's game over for the US economy. We also know that right now the US economy is struggling with the whole debt situation. So think about the issuance that comes. Think about, the investors' response to, 5% plus yields. So right now, if Trump was to get his way with rate cuts, we will see those yields massively surge up the page. Now, Powell has to choose. Do I cut because I want to safeguard the slowdown in the economy, or do I just allow for more data? That's option one. Option two is, if I am to cut without inflation being back at target, I'm going to send the bond yield above 5%. I'm going to put the US economy in a recession, and I have no way of bringing that US economy back to life. And so that's why when you look at the balance of risks, the only option Chairman Powell has is very simple. I have to go meeting by meeting, one data point at a time, and I have to hope, and this is key to understand, Chairman Powell really has to hope that inflation, we see a little bit of inflation demand destruction. In other words, he has to really hope the economy does slow enough that it offsets the added inflation coming from the tariffs. If he doesn't get that situation, we are going to be on pause for the rest of this year, and we're going to be on pause for some period of time until ultimately we see those tariffs pass through. So it's a very, very difficult situation. Hence why it's a rock and a hard place for the Fed right now. They don't really have many options. So
So I think,
maybe
by the
we can
way,
pause there, yeah.
I think the last press conference, I'm going to get my stat. My stat will be kind of close. I think he used the word data dependent 38 times during that press conference.
Yeah. Yeah. And I think this one you're going to hear the word tariff about 150 times. That's pretty much what the Q&A is going to be about. It's the implication of tariffs. I think everyone wants to really sort of peg him down and say, look, Chairman Powell, what do you think is the balance of risks with regards to growth and inflation? Because the reality of the situation is that I don't think the Fed knows. I think they don't fully understand it yet. And we've seen obviously a number of statements come out of the last couple of weeks from a number of the Fed members, but they don't actually understand whether or not we are going to get demand destruction from the higher tariffs. They don't know how much inflation we're going to get. They don't know if it's transitory. They really are, going into this sort of blindfolded. And expecting them to make policy decisions at this time it's a really, really difficult position to be in. And Powell alluded to that. Okay, he spoke, I think, 2.5 weeks ago, or 3.5 weeks ago, and he alluded to this, which is it's a highly uncertain environment, and yes, we might have to choose between the lesser of two evils. And this is what I'm talking about here today: is that he has got no good option here. He can't cut rates prematurely as much as he wants to. So his best option is just hope and pray that the economy holds up for long enough that it doesn't go into a recession, perhaps just goes into a low growth environment and stays there. That's his best hope, is just to see a slow growth environment where inflation is contained as a result of some degree of demand destruction. But again, we won't know that. We won't know that.
What do you make of the first GDP number for Q1?
I mean, again, I think it was largely anticipated. I think the fact that it wasn't negative like some of the banks were calling for was a plus. But again, I don't know that the GDP is the right one to look at. I think what some of the banks are missing, and again, I have to be careful here because I don't have the kind of access to data that they have. I mean, I get the same data as every other trader gets, which is the monthly reports. But if you look at the hard data, okay, we must obviously look at the two different types of data. The Fed talks about soft data and hard data, and we'll talk about the survey data in a minute. But let's deal with the hard data. What is hard data? Hard data is your non-farm payrolls, your JOLTS data, your manufacturing data, your services data. That's your hard data. Now, if we look at the hard data and what we've seen since Liberation Day, okay, Liberation Day was now just over a month ago. Non-farms, stronger than expected. Manufacturing, stronger than expected. ISM services, stronger than expected. JOLTS, little bit weaker than expected, but still above pre-COVID levels. So where's the slowdown that everyone's talking about? I don't see it in the hard data. Now, again, I have to be careful presuming that, we're not going to suddenly fall off a cliff, but you would have liked to have thought that 1 month after, we've had this sudden shock to the system, we should see that filter into the data, and yet, no, none of that. Now, where we are seeing, and this is the key, this is where I think there's a massive conundrum. Don't forget as well, Wall Street's been so wrong. If you go back over the last 2 years, Wall Street's track record on the rate cut cycle has been so wrong. I mean, they've been flipped and flopped 3 times in a row now, where they've priced in massive amounts of cuts, and then the economy didn't slow, then they got more hawkish, and then the economy did slow. I mean, they've been flip-flopped so many times. But where we are seeing something interesting is in the soft data. And the Fed keeps alluding to this. They keep telling us that we are focusing on the soft data and the survey data in particular. Because, again, I just want to get this chart up. Where do I have this chart? I do need to show you this. But if we're going to have a look at the, sorry, I'm maybe giving you all a little bit of a headache there. But if you look at the soft data, so soft data is your survey data. That's University of Michigan. I mean, let me just draw that. That's sitting at just above 50. And I zoom back to the 1990s, as far back the survey report goes, and that's as low as it gets pretty much. Okay, yeah, sure, we got there in post-COVID years when they were hiking interest rates aggressively. So you would have expected that. Okay, you put interest rates at 4.5%, and yeah, people are going to feel pretty lousy about the economic situation. But what's happened now? I mean, we just had an election. Trump's talking about onshoring, talking about cutting taxes, talking about deregulation, talking about all wonderful things, and yet consumers are not buying into it. Now, again, I have to be careful. Sorry, yeah, go on.
No, I have some additional soft data for you. So what I did in my household, I had 3 big purchases I was going to make later on in the year. That was a car, a refrigerator, and a new pool pump. And so once we started down this path with the tariff situation, I front run my purchases, right? I wasn't going to do them until November, December. I did it already this calendar year. I got it out of the way because I was, I don't know how pricing is going to be, what the effect of pricing is going to be when I get to October, November, December.
Yeah, I mean, it's a very interesting example, and I think we've seen a lot of that. I mean, just this morning, I was on the bike, and one of the YouTube channels I follow, they were talking about this new pump that's effectively being imported into the US. It's like new tech, basically. Anyways, they literally had a launch date set, I think 6 months ago, to launch this product. It's like this new big, gizmo tool. And literally, they had to stop the whole launch in the United States because they just have got no certainty of what comes next. Anyways, what they did was they took 1,000 of them to the US to some conference or whatever. Literally, all 1,000 of them were gone instantly at the show. And they're not cheap. We're talking about probably about $200 for a small little tool that pumps up your tires. Anyways, the point is this: I think there's a lot of that sort of example of people front running to make sure they get their product in. But the survey data is just it's pointing to a very different scenario where people aren't happy. But this is not the only part of the survey data that's problematic. Okay, this kind of does lead the Fed to say, well, hang on a sec, maybe we are about to see a little bit of a slowdown in the data. But again, consumers are a fickle bunch. Okay, they get pretty upset about a lot of things. But the key one I think the Fed is really, really concerned about, and this is where I think the opportunity scope is today for a hawkish lean from Chairman Powell, is this is the Michigan inflation expectations 5 years out. Now, I've put this orange bar here because that is the last point when the Fed started hiking interest rates. And they hiked 50, 75, 75, if you all cast your minds back to 22, where they're behind the curve. Inflation expectations massively ramped up, and then they began the process of hiking rates. And when they started hiking, of course, those inflation expectations got squashed. But look where we are now. We're almost back at the highs of 2022. And don't forget, this is at a time the Fed already 2 meetings ago referenced the soft data, and in particular referenced the Michigan report as well as the New York report. Now, the New York report paints a slightly different picture, but it is also starting to show that acceleration of inflation. Now, why does this matter? Well, because at the end of the day, the Fed's going to give us their updated dot plot next month or at the next meeting. And the reality is that that data point in terms of their expectations for inflation this year, it's going to have to be revised up perhaps north of 3%. Now, keep in mind, the market's thinking 3 cuts this year. 3 cuts is what the current bond pricing is. You ain't going to be cutting 3 times with inflation expected to be averaging 3% this year, unless we get a significant slowdown, unless we get a recession. And that's, for me, the opportunity scope today. I think Powell's going to have to come out. He's going to have to push a little bit on those expectations. And I think it's going to come in the form of some sort of an ambiguous answer to a question like, Chairman Powell, when do you think the Fed may be in a position to begin the process of cutting? And what they typically like to do, I've seen this so many times, they'll either say something like, not for a couple of months or meetings. That's one way they can say, well, 2 or more. So that's one way the market will go, hang on a sec, 2 meetings takes us beyond September, which means, well, we only get maximum 2/1 cut. So it'll be something like that, which is quite ambiguous, not always so obvious. Or they love to, in the US, you talk about the fall. You'll use something like that where it won't be before the fall. Or even very, very strong to say, look, we may not be in a position to actually cut again this year. Now, again, the reason they avoid that stronger wording is because they better be damn certain about it if they're going to use that sort of wording. So the Fed wants optionality, which is why they prefer to be ambiguous. Okay, be very, very ambiguous, which is we're not going to be in a position to cut anytime soon. Okay, there you're ambiguous. You keep your full optionality available. But again, I think the market will latch on to that as, hang on a sec, we're not getting 3 cuts this year.
So, but funny you should mention that 9 of the 19, the mode, 9 of the 19 dot plots from the last meeting were at 50 basis points less than where we're at right now. That was the mode. That was the most popular opinion.
Yeah, I mean the general consensus both from December and March was 2-2-1, basically 2 cuts this year, 2 cuts next year, 1 cut after that. I think what happens, look, if he does become hawkish, it doesn't mean we're not going to get cuts. It just means they get pushed further along the curve. So what you'll see is you'll effectively see them get pushed into late this year. The market won't give up completely on cuts this year because there are, of course, a lot of signs that we could be falling off a cliff in terms of the data. So they won't give up on complete cuts this year, but they'll push more cuts into next year. And then, of course, it also depends on how many cuts. So the Fed could always at some point revise that neutral rate up higher. But again, this is just such an uncertain time. I think that's how you have to go into this meeting. It's a very, very uncertain time, and the Fed is going to want to get in there and get out of there as quick as possible. That's going to be the key takeaway.
So what do you make of the slowdown in the tapering, right? We were tapering 25 billion. We slowed it down to 5 billion, I think, the last meeting. Is that also have I mean, they said because of the mechanics of the banking system, but is that also going to have a kind of a stimulus type of effect?
Yeah. Again, I think if you asked me a question 3 years ago, 4 years ago, it's absolutely liquidity plays a massive role, and it does in a very, very big picture. Is QT forming the opposite effect? Well, no, I think that's been somewhat debunked. And the way I like to think about the balance sheet in general, when the balance sheet's expanding, it's only positive for the stock market. When a balance sheet is contracting, they do it at such a slow speed that I don't think it has any sort of negative correlation to the stock market. So it's not a case of you buy stock market when it's QE and you sell the stock market when it's QT. No, it's not that simplified. Typically, the stock market will always rise when they do QE because of the extent and the speed at which they move. Okay, we call it the bazooka effect. They don't hang around. They go 60, 100 billion. They go to ZERP. They go to zero interest rates. They move very quickly because they're trying to restore stability and calm and liquidity in the market. Whereas when they go in reverse, they go at such a snail's pace that the market's got time to adjust. But to answer your question, look, we heard an update in the last meeting. Chairman Powell still thinks there's ample reserves, and this is not something that they're going to be discussing anytime soon. Now, I don't know why that suddenly changed. Banks were very well reserved, back in March. I'm not sure that's even up for discussion today. I think in terms of what's going to be interesting today, I actually just want to move on to another little chart here. If we go onto the VIX. What is an interesting thing to point out, this is the highest implied vol for a Fed meeting as far back as I can remember. I was going through the chart yesterday, and I mean, I've seen a lot of Fed meetings, and this is the highest implied vol for a Fed meeting in some time. I would probably think 2022 was the last time we had sort of a situation like this. I think the regional bank crisis, there was a high VIX, or at least we had already exploded in terms of the VIX and then started contracting as a result. But yeah, as far back as 2022, we haven't had such a high implied vol. Now, what does that mean for the listeners? Well, it means that Chairman Powell could say something perhaps mildly hawkish and the market could overreact to it. Okay, that's kind of, as a day trader, that's something you always want to be aware of, which is what is the implied vol? And because ultimately, if it's a high implied vol, it means that something very small can move the market to a great degree. Okay, so that's just one thing to be aware of. We are going into this meeting with quite a high implied vol, and if I was to go and have a look at the S&P, sort of chart, it's in a position right now where if you put a gun to my head and you said, pick a direction, long or short, I'd say sell the damn thing. So the reality is the risk reward is skewed now. I think there's a lot of people looking for that short. I think in the daily market rundown that I do every day, I spoke about it on Thursday last week. We saw those sellers initiate. Twice this week, we've seen that selling into the close. So this 5,700 level, we are seeing sellers. Okay, the point is that tape has changed now that we hit this 5,700. And so I think everyone's just kind of waiting for this Fed meeting to clear. Again, if you're going to put a gun to my head and said, when's the perfect time to sell it? Look, if Powell is not going to be giving us anything today, I think we could get a perfect buy the rumor, sell the fact. Your previous guest mentioned this and alluded to this, which is the Chinese and the US are talking this weekend. And I'm guessing it's going to be a whole bunch of nothing. And so I suspect we may get some sort of a gap up on Sunday on perhaps the meeting went well between China and US. We may get a little bit of a gap up, and I wouldn't be surprised if that's the top, and we see a good 5% correction from that point.
Yeah, but I mean that's
Yeah.
like that's the yin and yang that we're living with now, right? It's this whole process of finalizing the new trade regime with what's actually happening with employment, right, and inflation.
Exactly.
And so there's this yin and yang, and it's so news based right now that you could look at it from a day trader's point of view and saying, hey, this is paradise, or you could look at it and say, oh man, this is horrible. It depends on your style.
Definitely. Look, I think there was a moment in just after Liberation Day where too much vol even becomes difficult for us as day traders. Whereas now we've gone to the complete opposite. And I think psychologically, this is something I journaled about, back in, the last 2 weeks, was this idea of when you have these really big moments, this really big volatility, and your P&L sort of curve looks very different. Okay, naturally, as a day trader, your P&L curve is going to look wow during a volatile moment because that's what you're around for. And so what typically happens is we have this sort of this hard come down, which is, it's like the night after a big boozy drink. You're kind of on cloud nine the night before, and the next morning you wake up and you hate your life. And it's that same sort of situation. These markets kind of went into sort of a very difficult, grindy kind of price action where it just became difficult and the adjustment happened so quickly. And the reality is we have to adjust. That's our job as traders. We have to make sure we can come down from that cloud nine as quick as possible, get back to what are normal conditions. I mean, these are normal conditions where, you can't just buy through highs and sell through lows and expect to get paid pretty quick. So yeah, that adjustment's definitely necessary.
Yeah, so Khan in the chat asks do you think that the Fed will end QT altogether in June?
Again, I'm not sure it matters. Let me say it that way. Whether I think it will happen or not, I don't think it matters. Okay, I don't think QT is necessarily the big concern right now. I don't think it'll have implications necessarily if they were to prematurely end it. Like I said to you, I think the key thing for market participants right now, they do not want to see the Fed turning dovish until inflation is contained. Okay, investors will dump those US bonds as quick as they can should Chairman Powell turn dovish. He's well aware of that. Okay, right now, that for me is, you want to ask me what's the number one play for this year? Chairman Powell turned dovish today, opened the door to a cut in July, and I can tell you right now, those 10-year bonds are going to trade 5% pretty fast. The curve will steepen out as well, and what will ultimately happen is you'll just tip the US economy into recession anyway. So that's the irony of this is, if he cuts to try and support the economy, he's going to create the recession. And people need to understand that, because if you don't, this idea that cuts support the economy, well, no, because it's the long yield that ultimately that drives the economy. So you must always remember that interest rates are a blunt tool. Everything is priced off the long yield. So that's going to be the key. And I think at some point, in my heart of hearts, I'm kind of hoping he does, sort of abide by Trump's rules and ultimately cuts those rates, because that will be a field day for us as day traders. But he's been a fantastic president. I mean, I've been very impressed with him over the, what's it now? third term, so it's almost coming on 12 years. So yeah, I've been very impressed with Powell. Not 12 years. What am I saying? I've been very impressed with Chairman Powell. He's done a fantastic job. So
is that the same? Does Europe share? You're in the UK, right?
correct, yeah.
Does the UK share that sentiment?
In terms of what being fond of Powell?
Yeah, or no, of the president.
No, look, someone said to me yesterday, and I'll paraphrase him. There are those that like Trump, there are those that dislike him. But if you go through his policies, this idea of, getting immigration under control, ultimately bringing jobs back on shore, ultimately sort of rebalancing deficits. If you ask someone straight face, these are the policy measures we're going to take, what do you think of them? I think most people would agree, yeah, that's good common sense type policies. So at a policy level, yeah, I think a lot of British people and Europeans think he's doing a lot of good policies. We also suffer from some of the problems that we have, over in Europe. I think unfortunately it's how the message gets delivered. I think that's what kind of makes people not like the candidate, and they miss the point, which is the policies. They're good policies. Some of those policies are fantastic.
Yeah.
But yeah, whether we like them, whether we don't, I'm not so sure that matters. I think all we care about is the policy stance.
Fair enough. Fair enough. Well, it's good seeing you again, man. It's been a while. What's the best way people could find you? Reach out to you and follow you.
Yeah, so obviously Trudele.com. For those of you that are still interested, we did do a full market rundown on the YouTube channel. So just go to YouTube, type in Trudele, and you'll see the full FOMC rundown. It's 45 minutes. It'll take you through everything.
Right. Now, Trudele is spelled trade L-O. So,
Correct.
folks, just you type in trade L and then the letters L-O, trade low. I call it trade low, but Trudele sounds better. That's the keyword you use.
Yeah, exactly. And then I can go watch that YouTube. We also do a daily market rundown, which is kind of nice because we get it out just before you guys kick off. So it's kind of like you get Trudele and then you get the hours of NinjaTrader straight after it. So it's one of those that the listeners, there'll be no overlap. So that's a good thing.
Awesome, man. Well, I'm looking forward to talking to you again. I appreciate the time you took out of your busy schedule and wish you the best of luck. Thank you for your great info.
Appreciate it, Jim. All the best and good luck, everyone, tonight.
All right. We're going to wrap up the morning session of NinjaTrader Live. Great session. We got tons of stuff coming up. Remember, we're starting early this afternoon, which means I get a shorter lunch break. A little bit problematic, but I'm going to deal with that. 1:55. I know it's an odd time, but let me double check that. Hang on a second, everybody. Yep, we're starting at 1:55 East Coast time. Me and Shai are going to kick it off, and then we've got Tony Nash coming as well. You guys remember Tony Nash, he's awesome. And then we're going to have Stowe and XYZ trading the close. So we're going to have a lot of stuff to talk about. That's why we're starting early. So get some lunch, get some rest. We'll see you this afternoon. Thanks for being here with us.